Alright, what's up, guys? Girls, ladies, and gentlemen, Happy New Year. Let's make sure the mic is working. We don't have video. Let's fix this. I hope you guys are doing great today. Let me make sure I have sound and everything. It's been a little bit since I did this. Sorry, I'm a little bit behind. Well, I'm not even behind. It's just that there's a lot of stuff that I was trying to get set up here. Because I haven't done this in a while, man. So, alright, it looks like we do have audio because I can see this thing moving. I can find that out real quick. I hate to do this on stream, but it is what it is. I woke up with a sore throat today. We'll get into all that. I had a wonderful day yesterday. I had an awesome day yesterday, guys. I'm really ready for the new year, and I hope you guys are too. I really hope you guys stick to whatever it is you want to get done, right? Short term, long term, stick to it. Don't quit. Um, let's see here. How did I do this before? Unlock. Boom. How did I do this before? Let's see. Here's what I did. I think I did this. Is it even hooked up? Okay. There we go. We're good. What's up, guys? Sheesh. I haven't seen you guys in a while. You guys haven't seen me in a while. Holy smokes. I know I'm a little uneven because my camera is there. I'll fool with that shit later. What's up, guys? Girls, I hope we have a great day. I'm not worried about that. Okay, let's see here. Alright, so yesterday, I traded Tesla. I posted on Twitter yesterday. Let's see here. Let me just get rid of this. That's good. I'm going to lock that up. Bada bing, bada boom. Bada bing, bada boom. Alright, I traded Tesla yesterday. This trade went over 100%, believe it or not. And it looks like it's broken down below yesterday's low. So let's see if it holds this level or tries to hold the 100-day moving average, which will be this blue square. I'm not really fully committed to think that it's weak. I'm not fully committed to think that the markets are weak. I want to watch us pull back to that prior Fed day, which I'm going to show you in a second. But this was my trade right here. I know I got it marked out. I mean, you can timestamp it on Twitter. We literally caught the lows on this. Not this first low that it put in, but the second low that it put in. Is this going to freeze? Is it going to freeze? All good. All good. This is what I hate about like OBS and stuff. Maybe I gotta renew it or do the thing, but this is why I've had it off for a while. So, and look, it's trying to do it again. Unbelievable. So you guys might just have to deal with me in the corner. It's okay. This is a I already know that today is going to be a test day. I don't have. It's just really fucking with my money. We have Fed minutes coming out, but you got the Fed minutes when you got Powell and when you got the summary of economic projections. So there's going to be volatility, but I don't think that there's anything, uh, major going to come out of it because you got it. Right? The notes are what you got later anyway. It's about what they talked about in that meeting, that 2-day meeting, Tuesday and Wednesday. So nothing's really changed. I think Fed Bar was out this morning. Let's go through some charts. Let's go through the markets. So, welcome. If you're new here, if you could hit the like button, subscribe. We have a lot of fun here, right? When things go smooth, we have a lot of fun here. We like to make money, and we do a damn good job at trading. And for anyone that thinks that this isn't possible, we're going to show you otherwise. If somebody could help me, like, this is going to get old really quickly. All right, this is going to get old really quickly. Really quickly. Lock. Stay. Just fucking stay. Or let me hold my coffee while you cut it off. All right, let's go to the charts real quick. Coinbase, some of the bigger moves. So sorry about that. See, you see what I mean? Just trying to promote the stream in and of itself, and that's just a piece. That's just a piece of the pie. So anytime you guys have somebody that you watch, show them some love. It takes a lot of work, especially if they do it by themselves and they don't have a team. All right, so Bloomin' Brands, shares of the restaurant rose more than 5% after they announced it added 2 new members. The change comes as part of an agreement between Bloomin' and activist Starboard. After the Outback Steakhouse parent announced it added 2 new members to its board. Oh, 2 new members to its board. I thought for a second they added 2 new restaurants. All right, so Coinbase, Marathon. We could go into crypto. Shares of the company tied. Currencies fell sharply on Wednesday. Yes, that is dropping. Okay, SoFi. Let's go into this. Oh, shit. Shares sank more than 7%, downgraded to underperform from a market performance by Keefe. So the thing is with these upgrades and downgrades, like, they're picking what they want to put up here in a sense, right? Now it could be you can stick to who has the most credibility, right, on the upgrade or downgrade, but for however many downgrades you can find, you could probably find upgrades as well. That's my point. Tesla had remember the big pullback day a couple days ago? Well, everybody was talking about it was a downgrade. Well, there were just as many upgrades as there were downgrades. So, you know, it's all on how you want to look at it. I don't know why it's doing this. I really don't, unless it's the camera or what. So Charles Schwab. Downgrade from Goldman Sachs, PGT Innovative. So we got some good stuff here. Apple, we already know that they pulled back. Damn, even more extended a loss of more than 3%. Disney, shares of the entertainment giant, ticked up less than 1% after Reuters reported that activist hedge Black Wells Capital will nominate 3 directors for Disney competing. Is that competing? Yes, with the state. So look at this, guys. These are all trade ideas. Free from CNBC. All right? It doesn't take money to have information to be able to, you know, come up with your own trade ideas or find trade ideas and stuff in the morning. What time is it? It's 9:23. What I'm going to be focused on are rates, dollar, right? Let's look at, let's go to Coinbase real quick. Let's go to a 1 hour chart. Really give me the 4 hour, actually. Make sure that I have extended trading on here. Yeah, so I hope you guys had a wonderful New Year's. I hope you guys have plans. If you guys have any plans, throw it in the chat, right? Throw it in the comment section. What do you want to get done? I'll help hold you to that standard, right? All right, so like you can see here, Coinbase is pulling back into support here, right? We called this move out, and it may still be on here, down here. We said this rip out of this range here was going to give you your next rally. It pulled back, tested that base, and never broke it. And when a stock or an asset, whatever you want to call it, holds a position, there's one of two things. Is it holding it as support? As you can see here, this is a pullback, right? And it holds as support, right? There's not as much resistance up here as there is holding 24, right? 24, 25, 25, 25, 25, and not so much bumping into 31, 31, 31, 31. There's not as much of that. But it damn sure is holding 25. That's going to help you say, man, you know, even in the coming days, weeks, whatever, I think we're going to the upside. Now, if I take you to like healthcare, right? If I take you to healthcare, now that's off of a pullback, holds that price area. Those buyers are just holding it up. Let's go to like UNH, right? For an instance. I'm giving you guys an instance here. Now, really the instance would be the IWM. Now, this is different. This is not going any higher. This has risen, and it's just staying stagnant. Right? This is an uptrend, putting in a base, you know, and it just is struggling at 550. Right? That could be a downside move if you cannot break through 550. All right? I mean, I'm going to either just, this is going to be the last time that I mess with this. And you guys will have to deal with me being frozen. Give me 1 second. Let me shut this door. I had, man, the Northeast, it was, it's really dry up here, guys. It's cold. It's dry. I had to turn the humidifier on. And that thing is loud. It's huge. It goes through the whole house. All right, so this is UNH. You know, this is just giving you guys an example of when you can expect a stock to go higher versus a stock to go lower, right? The IWM, same thing, right? 2020, stayed there for fucking 2 years. Oh, excuse my French, right? All year, we could not get above and break to a new high. The minute that it did, it was met with a rejection, right? This was you were able to lock in profits on this, right? On this breakout. But this is different than what Bitcoin is doing, right? Bitcoin's pulled back. It's held that level, and now it has went to where it's at now. You know, when you see things like this, like coming off of a rally and not off of a pullback, and it just is bumping into overhead resistance versus pulling back, holding a support level. So those are just the stuff that you'll learn as time goes on, right? There's not so much bumping into resistance as there is sitting here at 25 and holding that level. And I remember we called it out. Oh, it was BlackRock. BlackRock this, but I'm like, you might have just missed your opportunity to buy, right? You got to remember when asset prices get to a certain point, like I kicked myself in the ass. I'm like, Coinbase was at $30. And I said it to a few people. I'm like, why were we not buying at $30? That $30 to $40 range on Coinbase, why were we not loading it up every other day? You know, just building a position on it at those levels. And look where it's at now. All right. So some of my trade ideas today going to be Tesla. Will be one of them because I was watching it yesterday. Also, Oxy Petroleum. That was another one that I was watching yesterday. I posted a lot of this stuff on Twitter as well. All right. So this is also going to help. Now what you're seeing is, let's look at, I need to bring up the dollar real quick, guys. I got to bring up the dollar. I don't know if you guys can hear anything. Let me make sure I'm connected. Not connected. Okay. I had a feeling I wasn't connected. All right. So, daily chart. I had said this last week or 2 weeks ago before break, that if like we were going to get a bounce in yields in the dollar, I want to see if we can retest this area up here at like 105 on the dollar. I'm looking for a bounce to like 105 area, possibly. Maybe this is just a bounce and then we just continue to pull back like this was here at 103. All right, this is the last time. I promise this is the last time I'm doing this. I don't understand. And I noticed before if I turned my computer off that it would not do it. All right, I got to get ready. The market's getting ready to open up. All right. Good luck today, guys. Here's the market. Let's dig right into it. Let's get right into it, guys. So Oxy, so what you're going to see too is if we're really going to get a sell-off, you're going to see everything go down, right? You're going to see energy, banks, healthcare, tech, everything will get hit. That's a real bear market. That's the true standard of a bear market. Sorry, guys. All right, let's see what Tesla's doing because I want to watch this level here on Tesla. If it ends up breaking. All right. Now look at the break through it and see it holding. So we clearly this box was the area I was watching yesterday. Man, we had such a nice long yesterday off of that level. I had a great day yesterday. I had a wonderful day yesterday trading. So if you don't know, you can follow us, Ivy League Trading, on Twitter. This morning, what happened? Yesterday, I took some tonin because I wanted to wake up early and get to sleep early. And my cat is getting older. She's getting older, guys. And she's just been sleeping all afternoon while I do stuff. And then, again, I've said it before in the past, like, it's just hard to get her on a schedule to where she's not, going after me in the middle of the night and waking me up. So, yesterday I took some melatonin, and that actually just backfired. It wasn't even her. That backfired on myself because I haven't taken melatonin in a while. And, so I took it. Man, I felt so weird. My dreams and, it was just, I was like, I wonder if it was because it was store-bought. I got it from Target, and I just grabbed a store-bought brand, and it had me loopy. Like, almost, not paranoid, like, because I always heard of people, getting like that. All right, let's see here. But yeah, so it wasn't fun. It wasn't fun. And it was a nightmare trying to wake up today, and I didn't go to sleep until 1, 2 o'clock. So, but it is what it is. As you can see here, we cracked the level, right? Tesla's going to pull back into this 100-day moving average at 242 to 241.50 area. All right, and when it does, let's see if it gets that bounce. Now, notice you have a gap here. This is off of a gap down. You may turn around and get a nice rally off of this 100-day moving average to fill that gap today into tomorrow. That's what I'm going to be looking for. That's what I'm going to be looking for. All right, and there's different things that I'm going to use to look at that. I got to clean these charts up for you. I know it's a lot going on. Look at that low volume so far. I mean, it's a 15-minute candle, but so if yields are going to be rising, guys, where do we want to look? You're going to want to look at solar names. And look, what is this? This is a break and a retest of this level of 4%. That's it. Now, if we start breaking back above it, that's a different story. But you notice how we're bumping into this level right now. Notice how yesterday, this is a daily chart, so each candle is one day. Notice how we bumped right into this level here that I have at 4.010. Look at us trying to reject it. All right? This stuff comes with time. All right? It comes with time. And why did I do that? Because there was divergence. I was seeing a bit of divergence. And you're starting to see a bit of it now. Kinda, not really. So this is what's making me believe that, we've just had a strong pullback, right? You just had massive sell-off. Whoever's short, it's just you're going to get assets yields, right? Prices do not just move in a straight line, right? Up or down. So you're going to get your bounces. So I do want to see here if we do bounce into this level and it continues to reject it. I mean, worst case scenario, what? It goes up to 4.112. But so far, as of yesterday, we're doing all right. And you can see here that the faster that this goes up, the higher and faster this RSI is going to go up, which is potentially going to bring us, I'd say, 4.1, 4.097. And, we'll see what happens. And we just kind of stay up here, man. I was watching something yesterday. It was a real estate channel. And I don't know who the people were, but this guy talked about 6 rate hikes, this and that, talking about rate hikes and doom and gloom. All right, so here's this test of the 100-day moving average. Let's get it up. Let's get shit popping, guys. Let's do this. I want to teach you guys how to stop losing money and actually make money in the markets. I do. I want to do it so bad, guys. It's not just, you can learn to read a chart. There's just, you can try to take it upon yourself, but there's just going to be you just can't pay for time. And again, I'm not here tooting my own horn or anything. I think, like, there's people that I look up to, right? That I would like to be as good as. All right, so now what I'm going to look for is that bounce back into 245 area, right? Why am I looking for a bounce back into 245? Well, that's prior support, right? It's prior support here, but it's also, if I take you to a 15-minute chart, okay, you're going to see here all this resistance, right? It's a whole area, right? This whole area in here. From 248 to 245. It's an area, right? Tesla's a volatile stock. So when it goes to an area, that area you've got to give it, like, even in accordance to your stop loss. And it can just sell off. Like, we cracked this 100-day and you can't hold this 100-day moving average, then it could sell off, right? That's also an option too. And once again, what will it be? It will be stuck in between like it was here, which is kind of cool for us, right? If it gets below the 100-day moving average and can't get back up above it and turns it into resistance, then, because look, 50-day curling up, 200-day is trying to tilt itself down. The 100-day is flat. So now all your moving averages are starting to shift down. That is giving you the sentiment that, hey, this thing could pull back. But if you get between this 100-day moving average, which is this blue line here, which is this, and the 50-day, which is this red line, you get it stuck between it, and then they close in on each other. You get a move, whether it's to the upside or to the downside, and you just get this, blow off or, deeper pullback, which is fun to be on, right? Look what happened right here. Right? Notice we're stuck between it. Bouncing between the two. It finally breaks. The shorts give up. The sellers give up. And the buyers pack on top of more buyers. Their sellers become buyers. Bang. We've done it multiple times. Back in the summertime. Right here. One of these days. Right there. There's one of these days here. We were waiting for it. We were like, guys, this thing is stuck between. It breaks out of its moving average. Right there. That was the day. I know it was here. Right here you can see this red line, this blue line. Now this yellow line is a 9 EMA. The green line is a 20-day moving average. Not worried about that so much on the daily, longer term chart. You can see it's holding, right? And then its resistance, bang, like it breaks. But what's funny, what you have is a pullback, a hold of it, and it tries to make an extension higher to close higher, and it can't do it. Tesla is weak. Tesla is weak. I had that circled there because that's where the sell-off started. Bang, right? And what happened? It's all about learning to read a chart. As soon as you went there, what happened? You're about to find out right here. Right? Right there. What happened when we got there? That circle was right there. What happened when you got there? Sell-off. So we know 260s is a sell-off area. Right now, right? This is a break out of the 100-day moving average. We're pulling back into it. Does it hold? We still have a gap ahead of us, guys. This could be a, you know, if you... Let's dig deep. Let's find out. Let's find out if this is a good deal or not. I don't like the volume. I can tell you that right now. I don't like the volume. I don't like the volume. The volume's nice. It's just not. It's not on the side that I want it. That I'd like it to be on. But the longer it holds here, then we can expect it to start to attempt to trade higher. And it may take the FOMC minutes. It may take a piece of news. Could be anything. But this is the point about, you know, understanding risk and the math, right? Understanding this is my best point of buying. If it breaks below this 100-day moving average, then I know, hey, we're going down to the 50-day. What's the 10-year doing? Just for instance, right? The 10-year is bumping into resistance. So chances are it goes in that resistance. It pulls back a little bit. If it pulls back, that's going to help equities go higher. You got to paint the picture. Paint the whole picture. The dollar, yields, you know, equities, whatever it is that you're trading, and using it to your advantage. So let me do a little bit of work here. Let me see here. Gotta check. I was a little upset with myself today because I woke up with a sore throat and I wasn't able to get some trade ideas on. I kind of was just like, you know, I have some trade ideas with what I traded yesterday. So here we go. I'm starting to get a little bit of volume here. All right. But I need to see a pattern. Yesterday, why did I trade Tesla? Because there was a beautiful double bottom yesterday. Double bottom on that level. I'd have to bring up the 1 minute right here, right? That sell off in the morning, bounce back. We come here to hold, pulls back again to it. You know, it drops a little bit lower, but it closes. That candle closed on that prior wick low, just right there in that area. Again, it's an area. It's not an exact price point. So here we go. Tesla's forming a bull flag. A bear flag, I'm sorry. Okay? If you don't know what that is, it's right here. Okay? And what are we? We are underneath VWAP. We're underneath VWAP. So right here, this candle right now is pulling back, that would be your best time to buy if you were, because your stop is at its least if you wanted to buy. All right, now you can see bear flag, it broke down. That's what bear flags do. Now what you want to wait for is the bounce back to this area and a reject, because this could be a failed breakdown. This could be a failed breakdown. I don't think it's going to be, though. If you guys have trade ideas, anything that's going on, throw it in, post it in the chat. If you'd like, if you just want to say hi, if you guys have any questions. The S&P, so let's find out what our leaders are. Again, I had a slow start to the day. It's my own fault. I mean, I was up at 7:30, but just getting the stream together, wasn't enough time to get a trade plan together and all that. So I'm just going to continue to stick with what I was trading yesterday. So here's the Dow. All right, why am I looking at the Dow? I'm going to look at all the indexes. I'm going to look at all the indexes because this is going to give me an idea of the categories in which the market is going lower or higher, right? Between banks, healthcare, technology, consumer, discretionary, defensive, you know, what's moving? All right, what's moving? Is it blue chip stocks? Is it tech stocks? There's IWM. And what's our leader, right? What's our leader? So here's IWM trying to catch a bounce. So if you notice, okay, come on. So if we notice again, come on. So if we notice, the IWM is back up here to lows. Let's go to the Dow. She just keeps coming in and out. It's all good. So you can see the Dow is broken down. Let's go to the Qs. Let's go to the Qs. Look at the Qs bouncing. The Qs are bouncing. They're not down here. They're up here. Right? And you saw yesterday the Dow was the leader. So what are we going to do? Are the Qs going to be able to pick the Dow up? Or is the Dow going to start pulling back and what do we have? It's starting to bounce. Because you're seeing the Qs are up here, the IWM is here, and the SPY is here, and here's the Dow. So using that, you're able to see what the leader is and what's the laggard. All right? We want to give it a few minutes, but you could also use ARK. ARK is another one that's always forgotten about. So it's rallied and it's pulled back on lower volume. So I'd expect ARK to hold up here. I had actually a trade idea yesterday. I think we pull back here to 48. So it's not very liquid, and I don't like, and look. It's already pulled back. Okay. This was one yesterday. You can see this arrow here. I pulled this up yesterday, guys, on Twitter. And I said, look for this pullback. Right here. Right there at that line. I said, watch for that to become resistance to get short. Okay. I might go and just find a small cap. SIDU. So here it is, TAN, T-A-N. That was yesterday. I said we pull in here to 53. Another look on 53 rejection for a deeper pullback. Who am I to say, right? Who am I to say what it does? Well, what happened? I want to teach you guys how to do that. I want to be able to teach you guys how to do this. 3 trades yesterday. I took 2. Tesla and Oxy Petroleum. But that was another third one. The Qs, I said also, it didn't work out as I said it, but I didn't say it, but my thesis was, let's see if there is a bounce going into the end of the day. That's what happened. All right, I'm going to go fill up my coffee. I'm going to wait a few minutes. I don't have much of trade ideas. So Coinbase is bouncing. What's Bitcoin doing? I wonder if this gets a bunch of people off their skis and shakes them short. So as you can see here, Bitcoin is making highs. Or making higher lows. I'm sorry. It's making higher lows. You can see that there is a rejection up here at 45. Listen, in my... No, it already broke through it. Okay. Yeah, that was 36. Only time will tell, right? In my opinion, I think you need to pull back to 35, 36 in that 30 range in order to bring in some more buyers to get that extension higher if Bitcoin's going to go higher. I think the longer it stays up here, I think we're going to have a sell-off. Doesn't mean like a major crazy one, but the momentum is died. It's dead. The momentum is dead on Bitcoin. So what I would do is see if, which it's not. I think this might be it. Look, it was earlier. Um, I would look for another bounce back to see. It kind of already did it, but 43,000. Look for a bounce back to 43,000, and you cannot break above there. Better yet, call it 43.5. 43 to 43.5. And that's when I think things start to get fun. I do. May take a little bit more time than that. But that's what I would like to see. All right. That's not going to give me much room, but I'll have to redo it. You can see here, that was just an attempt to break out. You got your squeeze, and it just, you got a lot of buyers there, or sellers, right? You got a lot of people that have been sitting on dead money, down money for so long, and they finally get a chance to recoup for a break even. This is the psychology of the markets that people don't, that they don't understand in their mind, on like, because they're not understanding what is taking place when things happen at certain prices. Because people that have been sitting on dead money, they're like, oh, it's finally back, right? It's finally back to break even. I've been down for 2 years. Whew, let me get out of it. I've gotten my money back, and I'm not selling until I get my money back. And then once they get their money back, what happens? You get those sellers, and it pulls back. But then what happens when it breaks? They're like, shit, I sold. Then those what were sellers that were trying to get their money back, break even, now turn back into buyers because they've seen that it's broken. And this process goes on and on and on, and it's done it for years. So Tesla's fairly weak today. It was 10-year. So let's see what happens if the overall markets try to bounce. If you guys could, if anybody's here, if you guys could hit the like button, say hi, anything, be awesome. I been in the markets for a while, do really well for myself, and I'd like to be able to help you achieve that. There's a lot of people that say the markets are a scam. They just haven't learned it, right? It's like everything is a market. Real estate, currency, equity, right? There's a market. What the hell? Let's look at small caps. I'm still eyeing Tesla here. I would like, in order for me to get short Tesla, I need a bounce back to this area. And look, we might be getting it now, guys. The volume is definitely there for the sell side. So there's so much that goes into trading that people don't see. Not that they don't see, I'm sorry, that people don't do, and they need to, because they do themselves a disservice. Right? Because I feel like a lot of you guys out there, and it's okay, I feel like a lot of y'all just say, I want to buy 10, 20, 30, 50, 60, 100 contracts, and don't actually know how much you're going to lose when you get to your stop. Do you have a stop placement? Do you have a profit target? Do you have that? Do you actually have a plan? and you're not able, and you guys aren't knowing how much you're going to lose, right? You're not having an understanding, a rough idea, because you don't know how fast or how slow. At times, it's going to happen faster in the morning than it is in the afternoon, probably, that from going from one price to another, right? But I feel like a lot of people trade and really don't have that risk, and they end up losing their ass because they lose their ass because they are not able to get ahead, because they are not able to make more than what they lose over time. They get a couple good streaks and they're like, man, I just cannot. To be consistently profitable, you have to understand the math. You have to understand, okay, if I'm going to risk this, if I'm risking $100, if I'm going to risk $300, $500, $1,000, I don't care what it is. You got to know how much you're going to lose on that option when it gets to your area that you're going to stop out to know that you are wrong. Instead of just trying to be quick. Well, entries are very important, but it goes with yesterday, for instance, okay? Yesterday. You know what I bought? I bought way out the money calls. As the market pulled back, I bought calls. I bought 260 calls yesterday on Tesla. Why did I buy 260 calls? Because yesterday we were at the 250 area to 245. I wanted to get to high a day yesterday, which was like 255. It's like something like that. 253, 252. Same difference. So this was a big move, right? That is a 10-point move. That's about what Tesla does. I'm sorry, this was a 6-point move, which is on the lower end of volatility. So the numbers yesterday weren't bad, but I knew with this sell-off that this level of 245 was so significant that you weren't going to break it the first try. I felt like you were not going to break 245 the first test of it, and that's exactly what happened. I have some other things that I used to tell me why I was confident on taking that long yesterday. They went well over 100% on those options, but more importantly, they opened the day at over $200. I entered them at 80 cents. 88 to be exact. It's like 87, 88 cents. So with that drawdown and that sell-off right off the bell and just sucked all that premium out of those contracts, I picked them up on the low, expecting a bounce off of that level. Bang. Huge. Nice trade. It was a beautiful trade. That was the game plan, right? What I'm doing is I'm using the options price, and I'm saying, this thing's just been whacked in half. We're at my level. Like, I got some meat on the bone here. Right? 80 to 150, 80 to 160 is 100%. And it was at 100% yesterday when you got damn near like just this wick up here through VWAP. So it was pretty much like towards yesterday's close, right around there. Once you get back to yesterday's close, those things were up to damn near 100%. It was a nice trade. I was really happy with it. That was the analysis. That was the trade plan. I don't think that this level breaks. I've got these options here that have just been obliterated. And I got a double bottom right off of this level. All I'm looking for is 3-4 points to the upside. And I can go over the Oxy trade as well with you guys. So that was also posted on Twitter. So here's what this is a sign right here. This is key. So now I may possibly, let me cover my tracks, take a short on Tesla. The day might not be over for it. It is down 4% already. I don't know if, look at that increase in volume on that breakdown off of this bear flag. That's pretty big. I gotta clean these charts up a little bit. A lot of bit, actually. Alright. So, still overall, yeah, the volume's decent. The volume is still decent. Oh, we have Joel's job openings. Awesome. All right. I'm going to get a cup of coffee after this. I'll throw on some CNBC again. You know, I had a rough. So we have ISM manufacturing, Jolt's job openings. Let's see what we get here in 1 minute. All right. What? Yes, 8.79 million versus a previous 8.8. So a little less, but still high. That's still good. All right, that's still well. And look, you're getting a better ISM manufacturing data, guys. It's not much, but you're working back to that positive territory because you've had quantitative easing. Well, we're in quantitative QT, but we have financial conditions have eased, and that is also what's helping allow ISM manufacturing to start to peek its head up and get above that 50 level, right? All these things play into an effect. There we go. All right, so again, 47.4 for ISM manufacturing. Jolt's job openings 8.79, just under 8.9. I mean, pretty much unchanged. The labor market is still strong. Still strong. Not that I would expect anything to change, but, and again, that Jolt's job openings is from November. Wow. And I guess you can expect ISM manufacturing to speed up with Christmas and seasonality. A lot of work getting done before the winter sets in and snow. So that's pretty common to see a rise in that at this time of the year. All right. So if you guys have any trade ideas or any questions, guys, throw them in the chat. Throw them in the chat. I love, you know, it's not just freedom, but because there's a lot of self-discipline that goes into it, and let's listen to my guy here. Let's listen to him.
House owner Bloomin, activist investor Starboard Value, adding 2 members to its board. More on activist news at a different name, Disney, later this hour. And Charles Schwab shares moving lower as well. The company downgraded to neutral from buy at Goldman Sachs. The firm saying the outlook for lower rates reintroduces EPS risks into 2024 and pushes the earnings upside case further out. Those shares down 2.9% right now.
Let's get Jolts and ISM with Rick Santelli. Morning, Rick.
Good morning, Carl. Yes, our November read on job openings and labor turnover expected to be around 8,800,000 is very close to expectations, 8,790,000, and that represents the best level actually because it's a bit of an uptick from rearview mirror had a big revision. I stand corrected. Last month's 8,733,000 leaped up to 8,852,000, which makes 8,790,000 the current read, the lightest read going back, well, to March of 21. Let's call it a little more than 2.5 years. All right, now the ISMs, the PMIs from ISM, and believe me, my kingdom for a 50, everything continues to be below 50. So ISM manufacturing, most likely manufacturing in a recession, although some of the numbers in areas have improved, 47.4. It's a bit better than expectations, and it's a bit better than 46.7 in the rearview mirror. However, it's still the 14th, the 14th number under 50. Prices paid, 45.2. That's the 8th month under 50 in a row. 48.1 unemployment. And even though that is better than the rearview mirror, better than expectations, it's still the 3rd number in a row under 50, and it represents 8 out of 12 under 50. Now, let's go to the new orders component, 47.1. That is less than expectations, less than the rearview mirror, and represents, get this, the 16th number in a row, 16th month in a row under 50. The last time it was 50 or higher was August of 22. So we see that interest rates, after reaching 4% in a 10-year, has now dropped
this was
back
a beautiful
down to
trade also. I don't know if I was
if you guys, if we were live, divine the difference between Fed easing, how many, and a slowing of the U.S. economy. Leslie, back to you.
Thank you. The 10-year yield climbing back above 4% today, although currently trading slightly below that threshold as investors look for new clues from the Fed ahead about rate cuts. And they'll get some when minutes from the latest Fed meeting gets released in less than 4 hours.
All right, so been watching Roku. It's just holding this level. Oh, it actually broke it. So what do we have here? How much meat do we have left on the bone here? This thing's already down a bit, so there's not much left. There's not much room there. There's $1, if that. So I'm gonna grab my coffee. I'll be right back.
And the reason, along with the rise in the stock market, could stimulate demand. Now, as for the markets, they trade with a 71% probability of a March cut and priced in a quarter-point hike at most meetings after that. The January 25 contract, look at that. 6 full cuts baked in with a current yield of 3.84. That compares to the average Fed official baked in just 3 rate cuts into their forecast. Like Barkin, most officials have tried to lean against the market's aggressive rate pricing, but not had much luck. The risk for the market today is that minutes offer some convincing evidence that there's more uncertainty than the market has priced in. And guys, I think the quit rate did come down. That's also sort of an easing of the labor market, along with that prices paid component or prices index inside the ISM. Also some welcome inflationary news in there.
Absolutely. Although in terms of kind of the minutes today, what do you think is the potential or possibility that they really push back in a bigger way than perhaps the market expects on the notion that there is an imminent rate cut?
Well, it's interesting. Sometimes, Leslie, the market hears something and doesn't react to it until maybe it sees it in black and white. Remember, we've had a bunch of Fed speakers on. We had John Williams on our air, other Fed officials on our air, Austin Goolsbee. A lot of them have pushed back against this notion. Whether or not it appearing there in the minutes in some collective fashion causes the market to sit up a little straighter and take notice, you can never know. But I just don't expect these minutes to say rate cuts coming in March and 6 are written down in ink. I don't think that's going to be the tenor of those minutes. I think it's going to be more like, hey, we're thinking about this. It's a possibility. We need to be very careful here.
Always speaking in statistical likelihoods, or at least the qualitative aspects of that. Steve, thank you.
Sure.
I've been chatting with several sources in the hedge fund world this week to get a sense of 2023 performance. Citadel once again posting very strong figures for its flagship fund relative to its multi-strategy peers. Citadel's Wellington fund generated 15.3% returns, according to a person familiar with the figures. A separate person who asked not to be named shared D.E. Shaw's composite fund results as well. That firm's largest multi-strat fund posted gains of 9.6% in 2023. Also a respectable showing there by D.E. Shaw. And outside of the multi-strat world, Pershing Square's returns, those are public, but Bill Ackman's firm generated 26.7% gains from its highly concentrated, mostly equities book in the year. Carl.
Does this rhyme with some of the great trades that Bill had in the course of 23?
Absolutely, it rhymes with some of the great trades that Bill had in 2023, as well as going back to 2020 as well. Some of his most profitable trades have been these more kind of, esoteric swaps and interest rate hedges that he has put on, more of a macro trader than the equity trader that he is known to be. But his longs also, of course, strong showing there, very concentrated large positions in names like Alphabet that, of course, performed very well.
Yeah, interesting, helps crystallize some of the events that we lived through in the course of 23, making its face on some of these returns. We'll watch for more to come. Meantime, the Santa Claus rally running out of steam, as you know. 1 day left. S&P's down over the last 6 days. Let's discuss where stocks go from here. Joining us in Post 9 is Daryl Kronk, Chief Investment Officer
Ooh,
of
that
Wealth
was
and Investment
nerve-wracking.
Management at Wells Fargo.
That
It's
was
great to have you
nerve-wracking.
back.
Thanks, Carl.
What do you make of the last
Bringing
48
the
hours?
coffee back. All right, one more
Well, the
time.
last
with
48
the-
hours, I think, is a little bit
with
of
the
normalness,
old,
right? You know, you're finally getting a little bit of selling action. People didn't want to realize the gains in December. I think when you look
the
more
old,
broadly at the equity market, though, and what we're looking at on this huge pull forward in the 60 days left in 23, you've got, you go down the list and you start saying, okay, let's look at sentiment.
Day's
The
not over, guys.
AAII, sentiment.
Day's not over. What are you guys watching? If there's anybody here, let's go through a few. Let's see what we have. Let's see what we have here. I don't think there is much going on in the markets today. At least I don't see anything. Sorry, I didn't know that was playing in the mic. I don't think there is any ABVC selling off. So small caps have had a few NEXI. Okay, we got something here. Let's go to the daily chart. Let's go to a daily chart. I'm probably going to stick with large caps, to be honest with you. Yeah, this thing looks like it's already running out of steam. Let's see here. So I would say NEXI, I would look for $10. $10 flat. If it's able to get any type of life. $9.99, baby. That's the first level. And then $13.86, which would be around $14. And look, it's going. Let's see what we got here. You're going to need some we could do it. I think this thing could do it. This is why it's good to wake up early in the morning. Let's look at a 5-minute real quick. Oh, that's not good. That's not good. Yeah, that's not good, guys. I don't like that. I take it back. This thing's... So, now I looked at the 5-minute. This candle is red. That first initial candle is red on a 5-minute. Now, if I go to a 3-minute, you can see how it's struggling here. And what I would need is an increase in volume to break through that high. I'm not sure if it's going to be able to do it. You have a lot of people here that are in from this morning at $3 that are up over 100%. All right, they got in here at like $3.60, $4 on this breakout, and they caught that whole move. They may have made their money for the day. Again, personally, it's got some nice volume, but I don't trust it. I don't trust this thing that it can extend higher. I think you might need a few days. I think it might need another day for people to find out about it. What I would like to see for this is if you could get it like a hold, right? If this thing could hold, like pull back to like 450. Pull back to like this area and hold and consolidate, and then you come in tomorrow, or today's Wednesday. Today's Wednesday, right? Oh, the old lady called. I didn't see her phone call. Consolidate, whatever, hold, and then you get more people find out about it, bring in some more volume, blast through the highs and get up to that $10, possible $14 level. It's coming. Like, it's going to have to be soon here. What are they going to do? What do you guys think? Does it break to a new high? That's what I want to know. Do you guys think this is going to break to a new high? I'm curious. You think this thing has what it takes to break to a new high? If it does or it doesn't, I'll go back and tell you why. See what I said? What I say, guys? I told you it was going to go. Like, now is the time. It's going to go. Crazy, ain't it? That's the shit that gets me fired up. I want y'all to be able to do that. I didn't trust it. I didn't trust it. I didn't trust it. It's my own fault, and it's okay. But this is a good sign. That's a good sign there. I told you. I was like, yo, this thing's going. It's like, it's going to make that decision, like, right now. And what'd it do? All right, let's take it over here. Let's watch. So, right here on the bottom left, this bottom left here is level 2. Okay, I don't know if you guys can see that or not. Pay attention to that. Time in sales is here on this 3-minute chart. We were on it. Now, why did I stay focused on that? Why did I stay focused on this? Because of the daily chart. I saw that that daily chart was a really nice setup. And I noticed that in the morning, it started to pull back. Like it had, you saw that tail on the daily candle. But this was a very nice daily setup. Let's see what it does when it gets to 10 here. And I still think, again, I don't know the short float on this. I don't know the float or the short, the short float. Those things are good to know. You do want to know those things. But, that's awesome. I hope somebody was able to take notice in that. That's the shit that gets me jacked. That's the stuff that gets me excited. That's the stuff that gets me excited right there. I told you, I'm like having that instinctive, you know, that stuff comes with time. It can be taught, right? That, hey, this thing's going to make a move. It's going to make a decision right now. Like here in the next minute, 30 seconds, 15 seconds, like we are in the moment of it making a decision. What did it do? 5 seconds passed, it made the decision and broke through the high. Like I love that. I love that feeling. And it's not about predicting price. It's about understanding what is going on and using everything that you have in front of you to be able to just know what's going on, right? Just to know what's going on. I wonder if the 3 people that were watching left before that breakout. That was fun. That was fun. So let me write this down so I don't forget about it, because I hate having that I need to fix this. Let me make a note real quick. That was sweet, man. That was fucking sweet. That was sweet. I would love to be able to help somebody be able to do that. Like that, I would love to be able to do that for somebody else to get that feeling, and be able to act on it. Right? You get that inclination of like whether you're short or long. The reason I did not buy this is because I did not think that it was going to. I didn't trust it. I did not trust it. I didn't trust this thing. It is showing you every reason to buy the dip as of right now. So here's your bull flag. right? This is a bull flag breakdown right there. It just broke down. Just broke down. Right there. I know it's wicked up there, but really the bull flag would be there. Let's see what happens. She doesn't want to die. Boom. Is it going to go again? The volume's not picking up. Watch level 2. That's to the left here. The right hand side is options. Not for this stock, but something else. That's the option level 2. You don't like that. So what you have here is just orders sitting up here in front of $10. So as it's getting to that $10 mark, you're seeing people take some profits. Again, I want to wish you guys a happy new year. I hope you guys are able to get and achieve everything that you would like to achieve this year, right? No matter what that is. What is going on here? Just trying to fix something here. Oh my gosh. No, I don't need none of you. No, I don't. No. Alright. I'm getting carried away with this thing that I'm not even going to trade. Let's see what you do here. Let's see what we do here. Let's see what happens here. See if buyers start to try to step in here. You can see time of sales 20, 10, 20. There's a bit of selling. So on the left is the bid. On the right is the ask if you don't know. So 60s, 40s. Pretty heavy selling. 31. You're going to see the most of that, the bigger numbers to the on the bid side. You should start to see it down here. Let's see if they come back. You can see that dip buy. Look, 38. It's a nice 41. Let's see. Are they going to try? Let's see what happens here. It just. Again, you know where this thing's going. It's going to 10. So is the risk to reward there? If you're wondering if you should buy this thing, what is the risk to reward? So this is probably going to deter a lot of people from going long this stock. So let's just bring it back, right? You got to do that. You got to talk to yourself and say, hey, what's going on here? Like, is it worth it for me to try to buy this thing around $9, below $9, and hope that I can get to 14, right? Take profits is $1 move from $5, 10%. Is that, you know, do you want to take that risk? That's okay if you do, right? The point is you want to stop yourself from acting irrational, and the only way to do that is to like go back to the, you know, kind of just regroup with yourself. I wouldn't do that. When I would have either bought this or went short was when this thing started to break out. When we called it here on this candle was like, hey, this thing is going to make a decision. It's either going to break through the highs or it's going to pull back again. Notice how the volume's getting lighter as it's going higher. That's something to take it notice of, too. Man, they're trying to hold this level, guys, at 816. But I would not be a buyer personally.
Closely, obviously, important name helping to influence the Dow, now down session lows, down 240 almost. Still to come, the take on tech. As Apple comes off its worst day in several months. Our next guest warns there could be more pain to come. We'll discuss that call when Squawk on the Street continues in just 2 minutes.
Power outages can be unpredictable, inconvenient, and disruptive to your life, posing a real threat to your family's comfort and safety. When the power goes out, you have no lights, no refrigeration, no heating or air conditioning.
The winds are not letting up at all here. We're going to see some power outages. The number one thing to prepare for is extended power outages.
Are you prepared? You can be with a Generac home standby generator. When a power outage occurs, your Generac home standby generator automatically powers up using your home's existing natural gas or propane, so your life goes on without disruption. You and your family are comfortable, safe, and secure. Stay tuned to get over a $700 value free on the most popular home standby generator in the world.
With the Generac, we don't have to worry about whether we lose power. If the utility company does not come through, our Generac does.
Having Generac takes a lot of the anxiety out of there's going to be a storm.
After the hurricane happened, we just wanted to be prepared for anything.
Generac generators are designed, engineered, and built in the USA. 8 out of 10 home generators are Generac and have thousands of satisfied customers.
How many times have you heard people say, I never want to go through that again? Well, the next time you go through it, don't make it so hard on yourself. Have a Generac home standby generator.
Call or go online now to request your free quote with one of Generac's nationwide dealers. Special financing and low monthly payment options are available. And if you call now, you will also receive a free 7-year warranty valued at over $700. The call is free, the quote is free, and there's no obligation to buy. Call or go online now, so the next time there's a power outage, your home powers up. Power your life with Generac. Call or go online to request your free quote today.
The Keepsake Frames app makes it ridiculously easy to frame your favorite photos. Just choose a photo that you love. Select the perfect frame.
I was overheated. Hey, you know what? I wonder if this is because it doesn't like me moving. I notice now that I get up and I get up and then it does that. So holy cow. It's warm in here. All right. So it pulled back. So look, I would use, so we have a 3-minute chart here. It's at the high. All right, so excuse me, sorry. I would be done with this stock if I were you guys. I personally would be. Look at the volume on that sell-off. This thing can still go higher. See, the 5-minute looks good, kinda, but not really. Look at that opening candle on the 5-minute. That opening candle. Yeah, I called out those solar names yesterday, and I'm upset that I wasn't on them today. It is what it is. You got to move on. So yeah, I'm gonna get rid of these. I may go back to it. This thing could set up. This is a low volume pullback. There's just something about this $10 level that I don't care too much for. I know it's $10, so I'm gonna get rid of it. And 14. Really, it's $13.80. I know it. So $9.99, $13.86 area on NEXI, and that way I don't have to worry about having all this nonsense on, on my charts for nonsense stocks.
On the notion that demand has softened for its critical iPhone product. Is that kind of the same thinking you have, or what is behind your more bearish posture here?
Wow, they broke that level. EMPH broke that level.
Term about innovation. Apple needs to show some sign that innovation gets unstuck, right? We've been buying the same iPhone for the last 3 years. They need to do something different in that regard.
What a move. I would look for a bounce at 119.75 or call it 120 to 119.80.
They are working behind the scene on something very compelling on generating.
You might start to get it now. What time is it? It's 10:30.
When there's new hardware coming, we know about it ahead of time because we have access to the supply chain. If there's something coming on,
We missed it, man. I missed it. I should have been ready. It's all good. It you know, life happens, right? Life happens. So yesterday, I fought with myself on a few different trades. One of them was this. I called this out again yesterday. So I traded Oxy Petroleum yesterday to the long side of Tesla long. Great trades as far as the plan and everything. So I posted this, and I didn't want to overtrade, but I said, watch this 53 level. I said, and the stock was down here, right? The stock was right here. I said, watch this 53 level. Let's see if we get a bounce back into that 53. Let's look for it to become resistance. Get short up at 53 if there is not a break through it and attempt at the high of the day. Because I knew, right? I knew that if you went back to the high of day up here, chances are, from what I seen on the chart, that this trade short would have been, that I would have known that this was not the idea. What did it do? It did not, it barely broke above 53. Again, it's an area, right? It went to 53.08, but whoop-de-doo. It went to 53, and from 53 is when the sell-off ensued. So that is the understanding of being able to understand the charts. I know that that would have been my stop loss. That if we started to get to the high of day, then I would have said, all right, up here, like, that's where I'm going to stop out. You know, maybe I give it the break of the high of day, but I said, you know, the trade is, it like, if it goes to high of day, then I know that it's going to go through the high of day, right? That's the point. The point is it should not go to high of day. So again, if you don't follow me on Twitter, Ivy League Trading, at Ivy League Trades, at Ivy League Trades. Okay. So right here, another look on $53 rejection. Really, it was supposed to be like another trade or whatever. Another trade idea. Another watch. 53 rejection for a deeper pullback. I wrote ENPH TAN. TAN was the trade. And I put our arrows there, and it was down here. It should not get to high a day. I can go over that tonight. You know. I would love for you guys to be able to do this. All these trade ideas I gave out yesterday. Look at Oxy Petroleum. What did I look at the arrow? Right there at VWAP. That was the entry. Watch 6020. What is that? 6019 is VWAP. 6019. So 6020. And then what happened? You guys know what happened. It broke the high of day. It pulled back to the high of day and went up to 62. That was the target. 61, I think it was. 61 and then 62. Right there, that's what happened. That's what happened from the entry right here at VWAP at 60.20. Right? So, I want you guys to see. Yeah, I want you guys to be able to do this if you don't already. All right, so I'm not too stressed about whether I find a trade today or not, which I'm going to look now. And then you know what I did yesterday? Looking at some homes, right? I spent the rest of the afternoon doing some things, looking at homes, and, you know, So it's just important to really understand your analysis, and understanding analysis, just like we just went through on that NVX something, NEXI. Like, the decision was going to be made, like, right then and there. Like, it's going to make that decision now, whether it's going to break higher or not. If you're just joining us, we were sitting here, right here, and we're like, and I said it. I said, hey, this thing is going to make a decision to break out, or it's going to break down. Like, it's coming. It's coming. 5 seconds later, bang. All right. Just that stuff comes with time, because once you, like, because you can instinctively, like, once you've seen something sit there, like, you've been around the markets for as long as I have, and when you see this price action kind of just like at these key areas and it's just sitting there, it's like you can kind of sense and feel, at least I can and have, you know, I'm not always correct, right? I'm not always correct, but I'm like, yo, this thing is going to make a decision, right? You have shorts up here. Are they going to risk a break through the high? And this is a 1 minute chart, 1, 2, 3, you know, 3, 4 minutes, like sitting there for that long. They're like, man, we're not pulling back. We're not pulling back. All right. So let's take it back to Tesla. Let's go to Tesla. So it broke the 100-day moving average. This was another wonderful trade from yesterday. Another beautiful trade from yesterday. It was actually to the long side. It was on the long side off this 245 level. 245, the first tested 245, I was almost certain that it didn't break. And half the other reason was the price of the options. They got obliterated, right? If you watch the options price in the mornings, I mean, the ones that I was in were pretty out of the money. Those went to the $60 calls. And they were at 200, it was like 200, 220. Right off the bell and into the morning off of that double bottom, I got filled at 88 cents. Got obliterated. So I'm buying the options that have just gotten murdered at a key level that I'm pretty certain the first time it tests it, it's just not going to break it, right? Because when you have a major level like this 245 level, unless you have earnings, right? Earnings, like a catalyst, a reason that when it gets to it, it's going to slice right through it because of the fundamental reason that something's bad or good, whether it's to the upside or to the downside. We pulled back into it and you know, just I didn't think that it was going to break it. I'm like, it's not going to break through it on better, you know, on beating estimates on delivery numbers. It could sell off in the morning. This thing is just getting slacked. I don't know if there's any extra news or things are just being sold, but you know, when you get to those key levels, right? Chances are they're not going to break, or you know, they're not going to break through whether it's break to the upside or break down to the downside on the first try. That's all. You have to identify those key levels though. You have to understand what is a key level. I think there's a little bit of worry. I don't know. I still don't think. So going back to Tesla, I was still iffy on this here. Look, this level here was never tested. It was never tested. This pivot high. Maybe like it's a wick though. Like right there, 226.13. It's a 4-hour chart. You can look at it on an hourly chart. But the wick did not test this. I still think we need to come back down to 225 to bring in some buyers and get a real test of this area. We went right down to it. It got balled up, and then it just was stagnant. So, and now once again, right? Once again, Tesla is going to be stuck between the 50-day and the 100-day moving average. Again. And that's okay. I mean, it gets kind of boring, but we know, we just keep our eyes out in the coming weeks. It's going to break out or break down, and it's going to give us that trade. It's going to give us that. Come on, what's going on here? I hate having to do this. I really do. It is what it is. feel like every time I move, it tries to like fix itself and then it shuts itself off for whatever reason. So, appreciate you guys stopping by here. If you guys could give us a like, subscribe if you haven't already done so. I'm going to scan the markets real quick. So, it's Meta, so you can see here, Meta's pulling into this area down here. It's coming off of a bounce. Will it break it down? Let's see here. If you guys have trades, if you guys have trade ideas, anything, throw them in the chat. Like something, you know, that's, unless you want to hold it all to yourself, that's fine. We could get a, oh yeah, I think I might try this. Let me do this. Man, I might miss it. It's going to have to happen now. Here's another example. Another example, guys. Another example. Another example. Alright, because I am looking at JP Morgan. There was news on JP Morgan, I think, this morning. I know. What's his name said something. I thought Jamie Dimon said something this morning about it. That it was, its earnings were too high, or it was something. I cannot remember. I can't remember. Alright, give me the SPY real quick. You know what? No, go to ES. Dude, just getting slacked. This is insane. Alright, so if you don't know, I am going to be watching for the Fed Day on the S&Ps. I've been waiting for that pullback and retest. I'm telling you guys right now, we get down there and we start to hold, I will be going for a long. Unless it tells me, unless I see that it's pretty clear that the long is not the answer. Because we could start to just put in a range here. And that level is going to be at 465. All right, that 465 area, there was a double top, right? On this day, there's this double top here that I'm looking. We just broke out. We never pulled back to it and retested it. Never did it. All right, so this is the level that I'm looking for, is 465.50, 465. Really, it's 465, plain and simple. All right, so it looks like the SPY should have room. If you get a bounce, you're going to test this pivot low here. All right, that's a given. At 468. That should be a given. That you test that level at 468. That's why you need this. All right, so let's watch for a bounce back to 468. I want to look for a bounce back, because now you just got the 15-minute trade line crossed down through the VWAP. It's 11 o'clock, should be close. Yeah, 10:45 should be close. All right, that we made that resistance. Boom, boom, boom. Man, I know it sounds crazy, but this could be the short. So it's either, so what should I do? If the markets keep pulling back, do I just take the JP Morgan? Yes, I'm going to take a JP Morgan short. I'm just going to put it on, guys. I'm getting short JP Morgan. It's starting to try and go now. Shat. What's the let's see here. Give me this. Where's the volume at? Come on. Are you kidding me? I'm not too sure just yet. I'm pretty certain, but that short would have been nice up here. That would have been a nice one. But I may put it on. And where's my target going to be? Target's going to be low a day. So let's do a... I don't like that one. 167. Where's the low a day? 170. Yeah, you got to grab the 170 puts. Alright, let me see if I can get a limit order on this. Alright, let's do it, guys. Never give up. Never, ever, ever give up. Don't give up. It's never too late. I mean, I hate to... Let me see what next week's are. I would much rather be able to get... I would much rather be able to get more time. Like, this thing, to pay $100 for a 170, it's a little tough, but... So what it's gonna break it. Oh man, if I can just get one more bounce here. If I get one more bounce here, 170.03, I'm gonna try to limit order here. I'm gonna try. So these are the things that I do is I try to practice. Oh, it's gonna break it. I know it is. I'm watching 109, 130, 108. 107. So if I can get in at 108. Alright, so there it goes. So there's the spread. 06. Done. What was the last fill? Let's see if I can get it. Let's see if I can get it, guys. I need to hurry. Let's see if I can get it. Let's see if I can get it. I got it. Look, see if it changed. Let's see if it changed. 106. See it changed? Alright, so I got that. That was a beautiful entry right there. Oh, you guys, the camera's not working. The camera's not working. No, I want you guys to see this. It's important that you see it. What? That's not cool. I wanted you guys to see all this in action. Now what I can do is, since I am in, I've only grabbed 2 contracts, guys. I kept it small. I want to limit order in. I want to get nice fills. That's practicing being a good trader. Okay? I should probably limit. Where was the SPY? I should have went up to the SPY to see where the SPY was. Alright, so now that I have a limit order in, so they're at 114. Let me go to 15. You'll see it change. Ready? You're going to see it change. Oh, 116. Shit. I might have got filled, guys. I got filled. I'm out. I messed up. I was thinking that I was... Why is the camera doing this? See, I want you guys to see that. Right there was a trade. That was a trade right there. God damn it. Excuse my language. I want you guys to be able to do this. Come on, man. Like... All right, so what happened there was I guess when I move my head and stuff, it does it. Let me make sure that I'm filled. That like look, just like that. Just like that, 105, 116, two contracts. What is that? See now, say it's at 119. I was going to hold this all day, but I was, I thought that I put in one order, but it put in both. Again, keeping it small. Look at that, all the way up to 129, 130 there, guys. Now so here's what I do. I would much rather do it working one-on-one with people to be able to understand, to do that. But putting in, like, I just entered in limit order. So I seen that 106, or that last fill was at 107, right? The spread was like 106 to 140. It was like 106, I forget what the bid and ask were on the options. But I know the last fill was 107, and I said right here, right around here, I said, let's get a bounce and see if I can get that like 105, 106 on the bounce. And I did. All right. Now, when I have it, the limit order, now I want to, what I do is I will go ahead and I will put my limit order to exit also immediately. Like, I will start working on that after I get the fill, because I can just go right to that order that's good for the day, and I can sit here and watch this level too. And I've done it with Tesla. Like 114 right here. If I were to just go limit order, put in one, now it's at 112. If I do like 113 or 114, you can see them right here. And you'll see on these bounces that it's going to come down. But that was huge. So what I do is I immediately go to my sell, because then I can just, all I have to do is adjust after I'm in, I adjust the price for my asking price for my option in accordance to what it's doing. Like I put 115 there, I think. Let's see. Let me show you guys, just so you guys know that I did it, because I know the camera was messing up. So orders here. So so I got filled at 106 for two contracts. Again, kept it small. Just wanted, this is what I'm trying to show you guys is like what you guys should do if you don't do it. If you don't practice limit orders, right? Take days like this to try it. This is a non-volatile stock. This is JP Morgan, right? Start practicing to do that. Or if you market order in at your entry, right? What you can do is you can start to limit order out and say, okay, this would take me a one-on-one to do this with you guys. But in accordance with your Greeks, you can assume that even like right now, let's say if this thing starts to, it's not going to pull back, but if this trade line on the 1 minute or even the 3 minute, see, I don't think this is going to hold, because I would watch the 3 minute here at like 170.76 on the right hand side of the screen where this trade line is you can assume that, so that the asking price to get into these puts, the spread at 112, I go by the asking price usually. See, now it's at 114 for some weird reason, because it pulled back. But once it gets to that trade line on this 3 minute chart, I guarantee you it'll be like 110. You'll probably see people fighting between 108, 110, 107, 110, and they'll be meeting in the middle there. And what you can do is, again, once you've entered, you can set a good for day limit order if you want. At least practice these things on non-volatile stocks. And start to say, all right, we're here. I just went through the plan with you guys, right? I said, let me get that bounce and see if I can get like a 106, 105 entry. I got it. I got filled. It actually went lower, and they gave me the 106. And I got filled at the 106 on the 170 puts for this week. And then on the exit, I immediately worked on that exit. I put in the order, 116, whatever. As you can see, which is the asking price. Again, that's right here at the top right on the lower left screen here. The top right is the options level 2. Okay, so I immediately have it in, because what that allows me to do is I can just bump that order up. I can, if it's pulling back now, like you see, JP Morgan is pulling back to the lower day, which was our target, right? That lower day was our target. 123. So if you want to get filled here, you could easily go in and say, give me 120, or 122. See how it went to 120? You see, because people want to get filled on that low a day pool. You see that? Now, you may not understand that because I've been doing this for a while. But you've seen it drop from 122 to 120 because people were trying to get filled. Now you're probably going to get the bounce. You're seeing 119. You'll probably start to see 116, 118. Right? It's going to pull back to the downside. So you're going to get that 122. Now people are probably like, all right, give me 121. Right? Let's see what the last fill was. Let's see what the last fill was on the 170s. Was 122. So somebody's still at 122. This here though shows you the last entry for somebody buying, not selling. So, you know, I get they're both the same in a sense, but I'm surprised that there's not, you know, because the buyers want the best price too, and I guess the buyers are waiting to get back to like the trade line, right? They're waiting to get back for that bounce to get enter on the short side. I mean, that was excellent. 106 to what was it? See, I shorted myself there at 115. We just watched them go to 132 from 106, our entry, like a few minutes afterwards. That's 30 cents. That's $30 on every contract. That is $60, and you're about to see it right now. Look, 129, right? It was up there. These people are undershooting it because they're trying to get out at low of day, and I'm talking to you with the options level 2. All right. So that was awesome. Like, you practice it. I just practiced it. Like, me doing that, whether I make or lose a little bit of money, this is not a trade that I was trying to do, but like, this was not a trade that I'm like, I'm going to hold this all day or whatever. I want to work on my trading like an athlete. What do quarterbacks do? They throw balls, right? They work on timing with the receiver. Okay. Start getting your entries and exits. Start understanding level 2. Start understanding time and sales. Okay, practice these things. Find stocks that aren't volatile to practice trading. You have to practice, or do it on a simulator. Right? Do it on a simulator. I'm telling you guys, like, I've got a green day. I have a green day. I didn't make an assload of money, right? But I stuck to my plan. I wanted to get out on an attempt to the low of the day. I wanted to take final profits at low a day, but you know, see, the options were 130 something right here on that because you had that fast breakdown, and now they're at low a day and they're at 120. So sometimes it doesn't make sense to get out at 120, or it doesn't make sense to get out at low a day. You want to get out when the options are at their highest, when you start to see that follow through. I can teach you guys all this. I can teach you guys all this. I'm telling you guys from the bottom of my heart. I'm telling you, you can really, you know, there are tons of different ideas and things that you can go and make extra money doing. Right? There's a lot. Wait, what happened here, guys? Oh, come on. Just gotta give me issues, right? Gotta give me issues. I don't know. I'm jacked up. That was sweet. So these options were at their most just a few minutes after we entered this. So that trade was a technical level here, right? Support. We broke it. We tested it. Bang. We got short. That was a nice trade right there. I would love to teach you guys this. If you guys want to learn how to do this, reach out. I think my email address is in the description. I am working on a few things. So the thing with this industry is they don't physically give people something that they can have as a roadmap to be able to. Guys, I do it as I trade for like 2, 3, 4 months. I will, or weeks, whatever. I will just notice at times I will veer off of the path, right? And I will be, because whether it's the market's changing, whatever, but just recognizing it and being able to fix it is key. That's what's key. So I think, let me go here real quick. Let me stop talking. I thought I was going to wake up with a cold today. I really did. I thought I was going to be sick. I thought I was going to be sick. PayPal. I don't even know why this is up here. Listen, send me a. I don't even know why this is up here. Listen, send me a. You guys can hit me up on Twitter, but I'm working on something, and it should be out shortly. Let's see. It was removed today this morning, causing volatility. Let's go to CNBC and see what we have going on for the midday movers. I don't think that comes out until 2 o'clock, though. Or not 2 o'clock, but 12 o'clock. You know, that's an awesome feeling. Like, right there. So, again, 106. Yeah, 106 entry for that JP Morgan. 115 exit. Couple bucks. Whatever, you know, it's... I'm going to keep JP Morgan on my list, though. All right, because if we end up... sorry, again, I was just looking to see if they brought out like midday movers and stuff. So... I forget where I was at. So here we are. Look at the spread on these now. You see how the spread's closed in at 103 to 111? That's a pretty big spread, isn't it? What's the last fill on the 170s? Somebody's in there at 116, guys. That's bad. This would be a good buy up here at 170.80. Because I would know here. It wouldn't take me very long to find out if I was wrong and this thing isn't going to break down again. That's technically a higher low. All right, so somebody just got filled at 105. They hit the bid. Let's do it. Let's keep it moving. Let's keep it moving. So this. See what happens in this Fed minutes. You know, I would like to get a 169.50 test of this. Let's do this. All right. Let's go to, you know, I'll probably stop this stream here in a few minutes and then we'll come back on during the FOMC minutes. So we have a couple things going on here. You have a double bottom on JP Morgan, but I also want to watch this double top right here. You guys probably can't really see it right there. Bang, bang. All right. There's a bit of a double top right there. And I want to see if we can pull back into this area here at 169.50. I want to see if we can test that level again and really solidify it. Really, that level is going to be right there at 169 flat. 169 flat. But we have already pulled back yesterday, apparently, and rallied off of that level. So this is going to be another... This is another signal here. It's like if JP Morgan holds up here at 170.50, right? It's given back half of what it did yesterday, but for it to rally like it did yesterday and then watch to see if today it takes it all back, chances are it's going to be pulling back even farther. Because once a stock makes a huge move like this did yesterday and then just erases it and takes it back the following day, that's a weak analysis, right? Your analysis should be that stock is weak, right? That strength was met with weakness, and the weakness has surpassed it. And look for a continuation, right? On the bounce backs, right? Takes it back right here, right? It rallies. We start to take it back. Look for the bounce back to this area at 170, then you get short and take it down to 167.50. Let's see if that happens. Let's see if that happens. But you have to break 170.50. And the stock is not moving off of 170.50 in a manner that would tell me that it wants to go to make new highs. That's the other part of this. Is how is the stock acting at these levels? Right? It's not in a hurry to get off of it. It's not. This could be a double bottom on a 5-minute chart. It could be. Right? It could be. You got time and sales down here. Some buyers, look, nice and green, right? This is what you want to see. You want to see that stock pull back into it and the buyers step in. If you're looking for it to hold an area of support, you want to see it get to that level and quickly move away from it to tell you that this has got strength off of that level and it's marching higher. I want to see what happens right there at that circle that we put. Guys, I'm serious. I would love to be able to teach you this, and I feel like a lot of you guys don't get the opportunity to learn this stuff because, one, you know, these people charge way too much money for what they don't give people. This whole industry is a joke. It is a joke. But it's okay. I'm going to handle it. Because if they won't do it, I will. And there's a lot again that goes through with the risk management part of this, right? I understood how much I was going to lose if I was wrong in that trade, right? I understood how much I was going to lose. So I limit ordered in and limit ordered out in that trade. And that's awesome. That's what I wanted to do. You know, that kind of stuff is going to help you, like, whether you have to do it on a simulator or whatever, you have to practice trading. You have to get good at trading. The only way to get good at trading is to trade. I appreciate the like. Whoever hit the like button, God bless you. Shout out to you. Let's go do some charts. Let's see what we got going on here, guys. So there's the bounce on JP Morgan, man. That was I'm happy we were able to take advantage of it. You could see the how should I say it? You could see the hurriness in me, right? I'm like, I got to get in this thing. This thing is going to break down, and if I'm going to catch a move and make some money, I got to get in this thing now. And we did. That was awesome. I was happy with it. This is not. I'm not here to, you know. We make a 15. That's a. It's a. That was a 10% trade, but whatever, you know. Let's see here. So again, here's another test of that level. So I'm going to keep JP Morgan on my watch. Here's another test of VWAP. So what did we do when we got to this level? You got away from it in a hurry. Let's go see what the SPY's doing. So now what we're going to do is we're going to say, hey, what is the SPY doing? What's the overall markets doing? What's the volume on these moves in conjunction to what it is that we're watching? I mean, technically, if you want me to be honest with you, this is still just a pullback and retest of yesterday's low on the SPY. There goes JP Morgan through blood. Let's see if you see a lot of people start to get out of this. Let's see what happens here. Look what happened at that circle, guys. You see the length on that candle? Because that was an area that I said, hey, if you start breaking back above this area here, right? You break above this area right here, watch out if you regain that level. What I would do is I would wait for a pullback to 170.99. Where am I at? Yeah, 170.99 area. But really, I would like to get it back down here at 170.93, 170.92, right? Let's start pulling back, bring this trade line up, and let's see if we can't start meeting it. And so this was one thing that I was watching for this stock, was the volume. All right, I noticed before we took this trade was this candle right there, but they were even. You can see this candle right here. All right, right here. All right. So they're pretty much even at just under 100,000 shares. I would actually say that green candle is a little bit more than that sell candle. So this told me that there may still be some strength on this pullback there. And what are we getting? If you get this pullback on this 3-minute chart, this is what I would watch for. A low volume pullback. Right? I would look for a low volume pullback and then see if we start to try to work ourselves up to the high a day. Right? That's what I would watch for. That's what I would watch for, guys. And maybe it consolidates during lunchtime here and eventually gets up to the high a day. If not, gets to that gap fill from yesterday. Let's go look to see what Tesla's doing. Let's see what happens here. Now, again, remember, right, you have lunchtime, so you could just get a consolidation here, and it could just sit here and chop, and maybe it pulls back a little bit to 170.78 to that my square box, right? And then afternoon, you get your push with FOMC minutes, possibly, or a breakdown. Or it gets back up to 172, 171.80-ish, and then we are able to get short, right, up at the highs on a, you know, on some volatility from the FOMC minutes. But again, I'm not. We know what the FOMC minutes are. We do. All right, we're going to get some volatility, but just because there's an event. So there's a reason for traders to show up, and there's a reason for the markets to move. I wish there's, let's see, do we deactivate when not showing? I don't understand what that means. FPS, video font, or format, any? Color space? Color range? What is that? Let me see. No? Buffering? Disable? Should I disable buffering? Maybe this will help. Let's see if this is what causes. Because I noticed when capture. Huh? Huh? Capture audio only. Let's see if I fixed. Let me go back to, okay, I went to properties. Buffering. Disable. When enable buffers video / audio data to ensure the smoothest and most accurate playback possible, but at the cost of increased latency. When using buffering with a video capture card, we need to set the card and the program the same frame rate for best results. Disable ensures lowest latency playback, but at the cost of frame playback accuracy. This is ideal for face camera rollies. Alright, so awesome. Am I really slow in this? No, it looks okay. Sorry, I was just looking in the other window. All right, okay, cool. We'll see what happens. We'll see what happens here. All right. All right. So there's that. All right. So there's J.P. Morgan. Let's look for this pullback. That's a nice double bottom. If we can get a pullback to VWAP and hold, you know, I don't want to overtrade. I also would like to wait for the FOMC minutes. But yeah, I don't want to overtrade. Let's go through some charts. We'll go through some charts, see if we can come up with some ideas. So Apple looks to be bringing itself back up to yesterday's levels. Let me do this. All right. Okay, so it didn't work. Now the camera's stopped. All right. It's all good. It is what it is.
You're probably not easily persuaded to switch mobile providers for your business. But what if we told you it's possible
I may just leave it, guys.
to save you up to 75% a year on your wireless bill?
I'll probably just leave it, actually. I'm just going to leave it. And if you guys need me, if you guys absolutely need to see me, my ugly face, then you just let me know. And I'll put it up.
It's a new year,
Let's
but
get
you know
some-
what? It's the
get
same
some
old, same old.
motivation.
You got to get after it on these Wednesdays. You've got to get it on hump day.
You
We're
hear
going
him?
to push right through that, and we're going to push ourselves towards the end of the week.
You hear him?
We're going to hit those goals. Let's get after it. Let's go. Giddy up. Good morning. It's a new
Tell him, Pete. Those guys don't get enough credit.
year for the company. Its U.S. market share increasing 0.3 of a percentage point, going up to 16.3% for all of 2023. One other note from GM's sales release, the company is forecasting that the U.S. auto industry overall will hit 16 million vehicles sold in 2023.
All right. Come on, come on, come on, come on.
Increasing up to 16 million. At least that's the estimate from General Motors for 2024. Guys, back to you. All right, well, thank you very much, Bill.
Let me see here. Let's do something. Let me do something real quick. Stream is not ending. Don't worry. 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 I wonder how long it's gonna do that for. Boop, 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 boop. I wonder how long it's gonna do that for. Boop, 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 boop. I wonder how long it's gonna keep doing it. It's hilarious. I know my voice is a little messed up today. What's up, Chris? Let's see here. So post, bang. This is all the stuff we gotta do in the morning. It's just, oh my gosh. How you doing today, bro? Happy New Year's. Happy New Year's. Dude. Let's see here. Spy. Cues. Did you trade anything today, Chris? Doing a little marketing, you know, whatever. Some eyeballs, MCN. But let's see. I gotta fix that camera. It keeps shutting off. All right. Why is caps on? This is crazy. This is so crazy. I don't understand why it does that. I really don't. So I don't know when you hopped on, Chris, but I was going through a JP Morgan trade, and I pretty much, thanks, man. I appreciate it, buddy. Let's kill it. Let's fucking kill it this year, dude. No bullshit. No making excuses. Like, let's go get it. Whatever it is you want, let's go get it. I'm trying to just get what I want. You know what I'm getting at. I did. So, so too quick, missed out. It's all good, man. So yeah, literally 15 minutes ago, maybe 20 minutes ago, JP Morgan. What I did was, the reason I did this was because I was going through and trying to, this trade right here, we did that. Really, they paid right here. So, and look at the extension to the high a day. So what I was also going to say was, we get this pullback to VWAP at 171. We got that. We never got that actual pullback to this area. So that's fine, because FOMC, we could be at high a day. FOMC comes out and it doesn't like what, that gives us a reason to trade banks. What am I doing? So, but the point of that was, I limit ordered in and I limit ordered out, and I caught the low on those options, and I didn't sell on the high, but I was doing it to show and explain, limit ordering and how, like, to practice the actual trading part of things. Athletes, quarterbacks, right? They throw footballs. They practice their timing with their receivers. The only way to practice trading is to trade, whether it's on a simulator or not. So what I was doing was, I was going through with the options chain, and level 2 and time and sales, but focused on the levels and the option bid and ask, right? Which is on this left side, at the bottom left of the screen, but the right hand side is the options level 2 for the 170 puts. and then level 2 for the stock itself. So we seen that there was a 107 entry, right? And the stock was pulling, it was like pulling back. And I'm like, I want to get a, like right there, I forget where it was like this candle here, wherever it was. I was like, let's look for that bounce back. And I put in a 105 limit order on the 170 puts for this week. And I ended up getting filled because I seen the last one that was filled before I went in was at 107. So I pretty much just was like walking through, practicing and saying, this is like showing people, if there was anybody here, the understanding of like trading and practicing. Like that was me practicing. I bought 2 contracts, right? I was practicing getting in and getting out and getting my entry. It was a trade off of VWAP, take profits at low a day. If we get the extension, we get it, but they paid the most here, and it wasn't even low of the day. They went from 105. We got in at 105. We hit the low there. They went to 132 on that candle. But so I was just going through and trying to show how, hey, I limit ordered in here. I see the last one that was filled was at 107. I was watching the 1 minute candle, and I was looking at the bounce, and I put in a limit order 105 because the spread was like 103, 110. It was like 104. But on the bounce of the stock, I was showing the level 2, how you're seeing the orders, like for people that are trying to get out. Like I was just showing different examples, because you'll see here, people right now, right, on this pullback, you really see what goes on, and I was speaking it out. Like you're like on a pullback, right, on those puts. People that are in puts on the asking price, we saw it go to 122 at these lows. Well, it went to like 132 or whatever, but you saw that people were like on the ask on the put side, you saw that they were at like 132, but you saw people going to like from 132 to 131, 130, because they want to get filled and try to get out, right? You saw it go up, and then you seen that quick pullback, and people are putting in orders. And it's really easy to do once you get in. Like you could just market order. Some more times than not, what I do is I will market order in, and then as like I get my direction, all I have to do, I already know roughly around what price. I'll just put in the limit sell order at whatever. Let's say if I get in at 70 cents, right? Or we'll say 10 cents, right? I catch a bounce back. I get in those puts at 10 cents, and I'll put like, we'll just say 15-cent limit order sell, right? Maybe I got 5 of them. I put it in for 3. And then from there, I'll watch this ask on the lower part of the screen on the right side of the ask. If the spread is like, the ask is like 16 cents to like 14 cents, right? And I get it, and it's, you know, you start seeing it rise to like, I'll be putting in orders for like 117, 118 or whatever, because as it gets that extension, I'll leave it there for like 1 or 2 or 3, whatever. And as it gets there, I'll let it take profits, because I feel like as the stock goes to that area, it's going to bounce back off of it, and I can like kind of catch the limit order on the sell part of it, right? I get in, I immediately put in like a limit sell afterwards, like whether it's higher or lower, just to have it there. Then I can adjust it. All it takes is 0.15, 0.15, put it in, and that order is there. And I will sit here and control the bid and ask, and you guys will see me do it, whether it's tomorrow, this afternoon. I will show you guys. I do it all the time with Tesla. Like you'll see me change. And I was showing my orders. I was showing you, like, look, there's my order at 115. It dropped. It was the first one here, and you saw me get filled at 105, and it changed from 107 to 105 because I got filled at 105, because I limit ordered in off of a bounce back, and it filled me. So I don't know. I was just going through it and really explaining in real time as I'm in it, you know, the limit part of it, and practicing, right? Like me doing what I just did, I literally took this and made about, you know, $30 a contract, $20 a contract. You know, I was practicing trading. I wasn't trying to make money, right? I was wanting to catch that move, but I was more focused on, I wanted to practice my limit order in and see if I could limit order out, you know, and because it paints the picture, because you'll see as we get this extension like 125, whatever, you're going to start to see people, as this starts to go down, go to like 124. Then the top of here will be like 124, and they'll say, like, depending on like this gap here with 9 EMA, you're going to get a bounce back. So you're going to see people bringing down the ask on those to try to get filled, because they want to take those profits at low a day, and they're jumping from 121 to 119 to 120, right? And trying to have the orders there, and it gets to it. You know, I have to play it back, you know. So I appreciate it, you know, but once you see it done and explained, you can really get a grasp on, like, because you could physically see what I'm doing versus what this limit, like what this bid and ask is doing too. This is JP Morgan, so this is the 170 puts. Like right now, let's see, look at this extension, right? See how you went from 175 right here to 74 cents? Oh, that's the put side. You should be on the call side, would make more sense. Let's go into money at $1.58, right? Let's look at these. All right, so here's the option exchange for the call side. Now, look, they're going to try to get filled. You're going to see a pullback. Look at 157. 156, this is going to pull back. See if it goes to like 154. There's not much action on it for whatever reason. I would have jumped this, I would have jumped that to 154 right there, because I would have liked to have gotten filled there, and this would not be at 156, because I would have put my 4-2-1 limit order at 154 to try to get filled on that extension high a day. Nobody's doing that yet. It's still 156, right? Because nobody has said, I want to take profits. They feel comfortable that this is going higher. Look, 157, okay? That's a bump. Now let's see if somebody tries to go back to 156 to get filled on that extension. They're not. See me doing what I would be doing if I wanted to get filled. I would have 156 there, and it would drop. You would see 156 for whatever the orders are, and then 157, because I want to get filled, and then they would react off of what I was doing there, because they're seeing that I'm trying to get out. This is struggling here. I'm using the 3-minute chart, I guess. And you should start to see this pull back a little bit if people want to get out. But it's above that initial low a day. So it's, you know, I could get in and kind of full with it. It's pretty spready there. I don't know how liquid it is or isn't. But, you know, you can start to really see the reactions off of it. I would have had like a 156 if I were to get this extension. I would have put it in at 156. And if I noticed that I wasn't getting filled on that pullback, like on this pullback now, I would go to 154. I would go to 154, 155. Look, 151. It dropped all the way down to 151. They're in a hurry to get out because there is resistance there. But again, I would have put 154, so it would have already dropped, and it would be different. But I'm not in it. It went from 157 to 156, now to 151, because they want to get out. But I would have changed it a bit. And what that also does is it will also bring up other orders that are there, you know. Because if you put it in fresh, like it's just not sitting there waiting. It's again, you know, it's cool to see in real time and explain what the stock's doing compared to what, you know, I would be doing as far as, you know, how I would be trading it. I know that was a lot there. So I would think that you're going to get a consolidation here. It's starting to be at lunchtime. We should get a consolidation. And I'm going to go through some charts. I'm going to go grab, I'm going to put on CNBC. I'm going to go get a cup of coffee or a Red Bull real quick or something, just to munch on, or just, you know, drink, get something to drink. I'm going to grab a bottle of water, and we will go through and see what's going on here. Get another trade going this afternoon. So there's still a gap on Tesla. Don't forget that. They're no. I'll have to look at. I'll have to check that out. Let me actually do this again. Let me bring this down here. Yeah, I'll have to check that out. So, Tesla, look at this gap. It's still, see, what I didn't want to see with Tesla today was that I wanted to see it pull into this 100-day and then get a bounce, right? Because you could have, what a really nice trade would have been a bounce off of this 100-day and then to fill this gap, right? Because you gap down. This would have been a nice long from 241. Well, it's 247. I guess it's only 6 points, but it's still 6 points. You know, that would have been a nice trade, but it never did that. I did trade Tesla yesterday off of this level, this bounce, because I knew it was not going to break. Well, probabilities with them beating numbers, whether it's great, not great, you know, it wasn't like it wasn't horrifying. It wasn't horrible for them. So I knew that 245 level wasn't going to break the first touch. And you put in a double bottom there yesterday, and I grabbed that double bottom long off of that, and then hit Oxy on top of it, which was another trade idea from yesterday. So yeah, I'm going to go get something to drink real quick. 38.2 should be up here. Let's see if I'm right. It should be 30% of the move. 32% of the move. The retracement. Yeah, 38.2 is up here. So it's a bit higher. I don't think there's much of a trade on Tesla until you get back up to this 100-day moving average. Because even at 240, it's already down 3 points, almost 4%. And where are you going to go, right? The risk to reward on Tesla, there's not much there. You have to, well, actually, 239. You actually do have a little bit of room there. Because your 50-day isn't until you get to like 234. Yeah, 234.50 area, 234.20. So if you do get a bounce, we're clearly below the 100-day moving average, unless they're going to start doing it now. I don't know if they do, though. I don't think this sells off yet. It could. My personal opinion is I don't think it does just yet. Yeah, it's holding. Because if it broke down here, if it breaks down, guys, watch out. It may start to go. If it can't hold that 9 EMA.
Will you enjoy retirement like these folks? As we remind our clients, get what you plan for. You may have a retirement plan in place.
Look, we haven't been here in so long.
Creating a plan with Fisher Investments gives you the confidence that your money can last through retirement. We'll shape your plan to be...
All right, I'm going to go grab something to drink. Let's see. What would... Sorry, Chris, I didn't see your... What's happening on the cues? Considered bear flag, or am I looking at it wrong? Let's find out. Sorry, I didn't see that. What time frame are you using? Not really. Like, not that you're looking at it wrong. I don't think you're looking at it wrong. I mean, I see what you're saying. I wouldn't consider it a bear flag, but it could be. Right? It could be. I see exactly what you're saying right here. It's a bear flag for the most part. It's a bear flag. Like, that's a 15-minute chart. In a sense, yeah. Nah, you're not looking at it wrong. Like, this isn't what I would consider a bear flag. We had a bear flag today. What were we watching? I think it was Tesla. You had two bear flags. Now, this was an intraday bear flag. Right here, right? Look at this. Here's a bear flag at the 100-day moving average. Was right there. Okay. And then you also had one right here. But no, you're not looking at it wrong. Should have been right there. It probably looks better on the 1 minute. Right there. Alright, see, I would consider that a bear flag, but it's just not. And then you can see the breakdown. Retest. There was the trade. But no, I see what you're saying. It's not that it's not. Let it play out a little bit. Matter of fact, let me. I have the cues up over here. I would like if this like Chris, like if you start to see it pull back to and see if it holds like 398.79 on the cues, and then starts to go up from there and starts to get tight, right up until the FOMC meeting, or not meeting, but the minutes that we already know. Yeah, like I say, so like really, like it's not going to matter what time frame you use. If there's a pattern there, you'll see it 15, 3, 5, 45. Look at that breakdown right there. Let's see if it hits that trend line on the 1 minute. It just broke down. And look at it trying to hold there. So you're not wrong at all. I wouldn't consider it one myself, but it is. I see what you're saying. It's just really steep. Like, what you'll see on a bear flag is like on an index is like you'll see it do it all day. It'll do this consolidation really, like it'll start to weave itself all the way up until like 2:30, 3 o'clock off of like a down 2 days a day, and it'll do it up until like 2:30, and then you'll get that afternoon breakout or breakdown off of those flags. But I see exactly what you're talking about. You know, I wouldn't consider it one. You know, it is. You know, it is. It's just really steep, right? There's no structure to it. That's all. There's really no structure to it, in my opinion. And when you usually get that, it's like there's not really, you know, other traders aren't going to feel comfortable in believing that it's a bear flag. If I'm looking at it right, is this what you're seeing? I mean, because you're not wrong. It's just like, look at this downtrend. Look how steep that is. You know what I mean? Look how steep that is. You're not wrong. You're not wrong. It's just like if I were to align these, they're not even. Like this downtrend is not even with the uptrend. You want to see it come in and just, you know, I can't really explain it. You know, I feel like this is probably going to get up to 399, and you'll probably see if some sellers can. Well, the 90 MA is all the way up here. Now you're coming back up to 399.22 more than likely. But I don't know, man. I wouldn't consider it one, but I see what you're seeing. You're not wrong. But, you know, it's all in the eyes of the beholder. You know, who am I to say? I mean, you break that uptrend. You break that uptrend, watch for a retest and break down. Once you break down, I think they'll finally give it up. Come on. See, I'm going to stop messing with this. I think I'm going to fool with it later this afternoon. And, because I'm tired of just fooling with this camera. I don't know why. If I would have known ahead of time that this Logitech camera was going to do this, I probably wouldn't have bought it. Let's take this idea and go look at the SPY. Because just because it's not doing it on the Qs doesn't mean that it isn't doing it on like the Dow or the IWM or the SPY. No, but your head's in the right place though. You know, I see exactly what you're doing. It's just really steep. that downtrend is just really steep, and it's not really, you know, your uptrend versus your downtrend. It's like not that it has to be clean, but the cleaner it is, you know, the more the traders are going to trust that that is a bear flag, you know, and that's going to create more sellers. And you're going to have people like me that are like, do I trust this? We've already came down all, you know. You'll have people put risk on to try to short it and give it a little bit of room, but let's see. So look at this. This is the Dow. Let's see if the Dow holds this area and the markets try to bounce. Here's what is going on the Qs. On a 5-minute chart, look at the volume. The buy side volume is a lot heavier than any of the selling. And what are we doing right now? We are putting in a higher low. Like right here, let's see if you can get some type of momentum, but it's lunchtime. It's 11:45. You might get some people to log off. Just from what I'm seeing that the volume is greater than the sell volume. And it feels like it's trying to start to curl itself up, in my opinion. You know, that's on the Qs. And that would also line up with our morning thesis on yields, right? Look at the pullback on yields. We're getting a pullback on yields, so we should start to get that bounce in the equities. And a lot of people don't use, I know the camera went, they don't use all this in conjunction with another. So I would feel better if this was like up here starting to break down, but it's not. And again, it's not just going to be the dollar and yields, right? Or energy, because you have a lot of stocks where it's just going to be profit taking. It's not even going to be sentiment driven, because energy's up, yields are up, or the dollar's up. Like they could all be down, and you could still get profit taking. So, you know, can't really lean on one thing. I just wanted to be mindful of that. Just because I'm, you know, talking about there being a pullback on the 10-year, you know, it doesn't mean that stocks have to go up because because yields are pulling back. What was I going to do? Let's see here. Let's go look at. So this was the other idea yesterday, which was Oxy Long. We nailed this trade. If you guys don't follow me on Twitter, go to Twitter, because that's where I posted them. Was this VWAP entry down here in the morning. I posted that on Twitter, and you got that huge extension. And that was the target, was 61. Right there in front of 61. So now we're making a lower high. This could be a good short here. This could be a good short right there on the 50-day moving average. Let me bring up the daily. Let me bring this up because I think I might want to try this, guys. I might want to. No, the 50 days down here. Now, I hate that this does this. Like yesterday, we saw, if you were along this with me, you saw it mess around with the 50-day yesterday. Like yesterday, it kept messing with it, and you know it would hold it, then it wouldn't hold it. Like you could see here, it in the morning it opens up below it, it pulls back off of it, tests it, breaks it, holds it, and then turns it in. You know, after that break and hold, it rallied, but then it went all the way back, and you were like, okay, this is the longer term retest of the 50-day. It broke the 50-day. It's pulling back to the 50-day, which is this red box, and it never bounced. You never got the buyers. Those buyers just took their profits here, right? They took their profits all throughout that downtrend, and they left, and it failed it. Now it's going back up. Now it's trying again. So that's what we're looking at. Does this hold? If that can hold, this could be a nice extension long in lunchtime, but you got volume. The volume's on your side. So, yeah, I would actually I'm sorry. I'm changing my thesis to a long on Oxy right here. See if you get that extension. I'm not sure if you get that extension, though. I don't think that there's enough momentum in this name right now to give you, like, a nice push. So, you know, just because something is a long doesn't mean it, you know, doesn't mean that it's tradable at this time. So, that's another part that I think people, like, see something and they think they got to trade it. There's, you know, this is the momentum. The momentum has already been had. So, oh, look, Chris, too, if you're still here, not sure if you're still here or not. This could be a nice bear flag, kind of. Like right here, this is a failed breakdown right there. Right there. That would be a nice bear flag intraday. Here, let me go to this chart. On a 3-minute. Like that would be a bear flag right there, right? There's your pole. Right? It pulls back, consolidates, it breaks down. And that's a failed breakdown, then it rallies. So, but that's a, you know, that's a failed breakdown. I wouldn't even consider this one a good one. I mean, it is a flag, right? That is a flag there, but I like those pennants. I like to see a pennant because it's showing you that price action is like they're fighting. Like it's like one of them's got to give. The tighter that it gets. So like here, I would be fighting two battles here. Like it's hard to go long because it's already made a nice move. And it's lunchtime. I don't think you're going to get it like an extension unless there's news. Is there any oil numbers that come out at lunch today? This could be setting up with a fundamental catalyst. No, there's not. 4:30 API crude oil. Because usually at 1 o'clock, 12 o'clock, you'll have, you'll have at 11 a.m., you have these, you have this oil data that comes out at midday. But not today. And usually it's on Friday. See, 1 o'clock, Baker Hughes. See, that would be the type where, okay, it's setting up for the long. We're getting some data at 1 o'clock, 12 o'clock, you know. But I'm not going to look at that. Yeah, I might go get something to eat. I'm going to go grab a bite to eat, and then I'll come back and we will go through some charts if you guys want. I think my earbuds or my AirPods, they are still connected. That's weird. That's weird that I didn't hear it. Yeah, I'll let me go get something to drink. Let me go get a bottle of water. My throat's dry, and I'm gonna grab a snack. I'll be right.
And I think the of argument Disney and Value Act together make on behalf of their board. They obviously have the addition of these two new board members who both have great experience and also very high profile. And I think that's what's really key here about the Value Act piece. The next shoe to drop here, Leslie, is we're waiting for the preliminary proxy filings, both from Disney as well as from Trian, and that will be the thing that pushes this forward for the rest of the shareholders out there.
Interesting to watch, Julia. Thank you for helping make some of that a little more clear. Julia Boorstin on Disney today. Coming up after the break, attacks continue on commercial vessels in the Red Sea. How those companies are responding and the impact to the global supply chain.
I am looking for. I've been waiting. All right, this is our Fed meeting back here. All right, this double top, right there, that double top. I've been waiting for this retest of 470 on the futures. 2-3 weeks ago. So we do have a pivot low support here. All right, so you'll probably get some support right there, which we've already gotten. But that is a level, this double top, and you'll see on the SPY. This is why I always do this. I have, it may not give me enough time on the SPY. It does. It gave it to me. All right. You can see this blue box here. I always label the Fed days, so I know, like, we've rallied from it. Now we're back to it. So I want to see a retest of this double top and see if we could start to, like, find a long. See if we can get a little bit of a changing of momentum at 465, because there's nothing like what's changed. Like, have we gotten bad employment data? Has there been a hedge fund or banks, like, yes, the Fed's giving them liquidity? That's more of a reason to go higher, right? At the end of the day, they're not letting them fail. They're not. So you have to look long. At least I am. I think right now we're just having profit taking on stocks that they've made all this money. And I think we're getting a nice pullback here. And these two areas is what I'm going to be looking for. 468 and then that double top from the Fed meeting to get that retest and hold of that 465.50 area. I think if we get down there, you're going to see some buying, guys. Let's see if I'm right. You've already saw this dip buy yesterday. Look at this from yesterday. Look at that candle. Look at that. It's just over 16.5 million candles or shares. I'm sorry, 16.5 million, over 16.5 million in a 15-minute chart. All right, so you can see that volume is increasing to the buy side as we get down here. So, you know, that's a dip buy. That is a dip buy there. So just pay attention to that. And I think if they give us 465, I think I am going to look for a long. All right, you know, I'm going to watch it as we get there. And even if, like, we still have to break 468. 468, I know it sounds crazy. Like, who's going to buy the SPY at 468, nearly $500?
5.
We've had 2.5 years. We've had 3 years. 2020.
Welcome back. As the conflict in the Middle East continues, our next guest points to what he calls the ugly truth that the Iranian regime is key to the Middle East's worst problems.
Because that was my buying point. Like, I was like, I'm done after that. And what happened was is we never got 400. It was like 398, 399, and we woke up with the gap up to 402.
It's an important day with the death of this deputy Hamas leader and, of course, Iranian warships in the Red Sea. What do you mean by U.S. inattention? What more needs to be done?
For the long term.
Well, look, it's getting more and more obvious. You don't have the October 7th Hamas attacks without Iranian support.
You have to
don't
buy
have
at higher
the problems
prices.
in the Red Sea, Houthis attacks without Iranian weaponry, without Iranian
as crazy
support.
As it sounds,
the same is true with Hezbollah, has thrown 1,000 rockets at
if I see
the Israeli north, and things are tensioning up there. That also doesn't happen without Israel.
Through that level.
And then on top of all of that, we've had an announcement
I will be right back.
Just before Christmas from the International Atomic Energy Agency that Israel's ever closer to a nuclear weapon. It's tripled its near weapons grade uranium, so it could be as close as 2 weeks away. It has enough weapons. It has enough.
Look at him trying to talk the markets down.
Excuse me, near weapons grade
Don't listen to that
uranium that it could upgrade to produce 3 weapons. So all of this tells you that the problem's not just Hamas, the problem's not the Houthis, the problem's really Iran. And Carl, your question is, what do you do about that? Well, I think over the short term, you have to keep the shipping lanes open. You have to show that Iran is not going to succeed through its proxies.
All right, I'll be right back.
Over the medium term and long term, you have to put Saudi Arabia back on a normalization track with Israel. You have to put the Abraham Accords back together. And you have to almost build what you did in the Cold War vis-a-vis the Soviet Union, which is a whole area of modernizing, growing, prosperous countries so that the Iranian people see that what the regime is bringing them is not good.
Right. Shorter term, though, this Operation Prosperity Guardian, which was intended to make the Red Sea passable, is that a short-term tactical failure, not just on the U.S.'s part, but on our allies?
Because look at
At
it. We
the
have
moment,
not.
you
It's
have
been
both
support.
Hapag-Lloyd and
But
Maersk,
where in
and
here
others
is there
saying
resistance?
they're not going to send their ships.
There is no
through
resistance.
the
We
Red
have
Sea
not
right
made
now.
470,
I think that the U.S. is
resistance.
determined to open that up
Oh,
again.
yeah. Sorry about that.
It may take
I
a
know.
little
I
bit,
figured
but
it
if
was.
12% of the global
I figured it
economy
was. I'm sorry.
runs through
I was
the
just
sea,
saying.
1/3 of all containers
470,
runs through that
150.
area. And so I think
Notice
the
how
US
there's no
has to show
resistance,
that it
right?
can
You have
keep
support,
that
support,
open
support,
with its partners
and even
allies. So I
back
think for right
prior,
now, it's
right?
not
Support.
succeeding,
It drops below it, and it just went right back up through it, and then you just drop below it. You never. There are no sellers at 4170 as of right yet. They sold down to it. They broke it, and then like it's just you haven't said 470, 150 is the line in the sand. Again, it's just how I read a chart. It's like, yes, we've made 470.50 a resistance level. You got here, you bounced, you broke it, and it made it resistance today. But I think if we really start to get going, you gotta watch for yesterday's like pivot low, not pivot low, that'll be here, but just double bottom. That double bottom there, 470, 150. So that's all. I'm gonna go grab something to drink. I won't be long. I'll be like 2 minutes. I gotta get something to drink.
This really lies in Israel's hands. And I think the closer they get to an election and the prospect of a Trump victory,
and you see what I mean, like you can see here this pivot low, right? You break it, and you always pull back to retest it.
I think that's what officials believe.
So
Fred, appreciate that very much.
it's just I feel like this is a clear support level. That is a clear support level. It was not breaking. You got that nice bounce, and I think if this market's going to be weak, it's got to pull back to test this area. I feel like it's got to test that area right there. It's got to pull back to it and kind of just fail, and then we'll see what happens. I think we just pull back down to the Fed day and try to bounce off of there. I don't know. We'll go through it when I get back, guys. I'll be right back.
Less than 1% declines. Nasdaq's the biggest loser, coming off the worst day it is, as well as the Nas 100 since October. Tech's worst day since August. How about this from Bespoke, Stephanie Link? Tuesday was just the 5th time in the Nasdaq's history that it started off the year with a decline of 1.5% or more. I mentioned the reshuffle. You have new moves that have nothing to do with tech. Yeah. It's your own personal reshuffle. You buy ExxonMobil, you buy Bristol Myers. 2 areas of the market that were disappointing last year, energy and healthcare. And you're going in. Why?
Mean reversion. I think you're going to see it. I think you're going to continue to see the broadening out like we have been seeing since October, the lows. We saw the S&P equal weight outperform the S&P market cap weight by 200 basis points. Yesterday was much of the same. And I just think I'm a very big believer in mean reversion. That's not to say I think tech is going to crash. I don't. I still own a lot of tech. We're going to talk about that later. But I just think there are some opportunities that are presenting themselves. I haven't owned ExxonMobil in probably 10 years.
Wow, because you were Chevron.
I was Chevron.
Which you sold too, because you got fed up with that.
Yeah, you know what? Exxon has done such a better job in the last couple of years in terms of execution, in terms of M&A. I love this Pioneer deal. I'm sure Joe has an opinion on that as well. They're going to be the #1 player in the Permian, whereas Chevron, they're making M&A outside of the Permian, which I'm not really crazy about. There's a lot more volatility there. This stock trades at 5.5 times forward estimates. The long-term average is at 7.9 times. You get a nice dividend yield as well. So down 4% yesterday, last year rather, Scott. I think we can see. I think energy is going to rally this year, again, as a mean reversion trade as a sector as a whole. And I want to own Exxon because it's 22% of the XLE as well. People will be buying Exxon and Chevron as well, right? And I also own Schlumberger and Diamondback Energy. Bristol, we talked about this a couple weeks ago.
Well, you have J&J.
I have J&J.
Right, so you've legged into energy a little bit more of late.
Yep.
So why does this make sense as part of that?
Well, again, also mean reversion, and I had been buying a lot of J&J over the last month. In fact, offline we were talking about healthcare, and the past month is probably the area where I've allocated the most in terms of a new sector. And so I'm getting close actually to market weight, but these are really concentrated portfolios in terms of positioning within the portfolio, rather. This stock was down 36% last year. It trades at 7 times forward estimates. It has one of the highest dividend yields, 4.5% in the sector. And they've got a bundle of cash too, a really good balance sheet, very little debt. What I think is going to take some time to see this play out because a lot of their drugs are going off patent in the next couple of years. But that's why we're seeing so much M&A from the company. In fact, since
they've been on a spending spree.
Since 2019, they have spent $119 billion on M&A to replenish that pipeline.
Yeah, well, I mean, since 2 weeks ago.
Oh yeah, no, I know.
Right?
3 deals, I know, and that kind of caught my eye, and that's what we talked about. Remember, I sold Nike, and I said I have a little cash on the sidelines. Then they did this other deal, and I was thinking to myself, it's so cheap, it's so hated, it's only going to grow revenues and earnings low single digits. That's not glamorous by any means, but I do think as these new products take hold, you will see a kind of a resurgence of interest in this name. And again, it's just so down and out at this point.
Okay, so does this reshuffle or whatever you want to characterize it as, it's not necessarily a rotation because a lot of stuff is red, but NASDAQ's down more than everything else again. Does this have legs? And if so, for how long?
I think the important question you have to ask yourself is, well, does this have legs and for how long? Potentially, yeah, I think it does.
Feels like it does, right?
It feels like this could extend into earnings season, and earnings season reverses it, or potentially a really bad unemployment report that sends the 10-year back towards last Wednesday's low at 379. And then, in fact, I think you'll see a little bit of a rally. But I think the bigger question is, what do you want to do with a market that's selling off aggressively at the beginning of the year? Do you want to treat that market as an opportunity to add to risk, or do you want to continue to trim? And we talked about yesterday trimming.
That's a good question. That's what I was going to bring up. What happens when we get down to that Fed meeting? Do they continue to trim, or do we get some buyers to step up?
Yeah,
we'll see.
Caps. I mean, I look at,
we'll see what happens when we get down there. We'll start to see what a lot of these names are, see if they start to hold, right? We start to see NVIDIA, AMD, like healthcare, JP Morgan, right? As a sector, Google, Microsoft, right? You get technology, banks, financials, healthcare. You start to see them hold these levels, and chances are that's just profit taking. We may start to either put in a channel or work higher, and that's what I'm going to be looking for as we get down there.
That you're getting rate relief, that the potential is there for taking the hard landing off the table and getting the soft landing, and that you get the broadening out of the market.
So,
and you
as you can see here at this gray box,
like
right?
Stephanie is,
the analysis, we're on to something here. This was the area I was like, let's see if it can hold, right? See if it holds this area on
and
NVIDIA.
I think on a pullback here, like you have over the first 2 trading days of 2024, you want to look to add risk into those areas of the market where they were neglected in 2020.
I'm curious if you get some more profit taking up here on JP Morgan.
2.6% is the latest number
15-minute.
From Atlanta Fed tracker.
So you're getting a MACD crossover.
Doesn't really matter, but I think that translates into
not
pretty
really
good
mean
earnings
anything, but
on the top line. And then as we've talked about margins, as inflation has come down, input costs have come down. I think the margins are going to hold in better, and I think that's what's going on here.
Probably just consolidate. If we do pull back and hold,
corporations, and so I think earnings and the reality that earnings are going to be better than expected, not just for
JP Morgan could be a trade here in the next couple days, I think.
Look, ExxonMobil,
again,
their
we could get
cash break even is at $35.
we could get FOMC to kind of help the situation, whether it's to the downside or to the upside. But that's a nice double bottom today, and let's see if it can go higher. See if it can go higher.
I think it was the first time that we just showed at the bottom of the screen. First time the S&P has led the year with back-to-back losses since 2015, is I think what I read. Is that just because we had, Bryn, such a strong move into the end of the year? Should we not read anything more into what's taking place over these first trading days of 2024?
Let's see here.
Well, I mean, history will
It's my
tell
cat
you
running in and
as
out
goes the first week,
with the
goes
door. I
first
had the
month, goes the
it's
first
so
year. So I
dry
do
up
think
here
you
in the
have to read
Northeast.
into what
It's
happened
it's
this week,
been
because
cold the past
that's
couple
just not
days
an
and it's
adage. There
dry.
is some
It was
history
like
to
so
that.
dry. My hands
I
are
think, though, from a
red.
positioning perspective, we
So
obviously
I turned the
talked a lot about the
dehumidifier
mega
on
cap.
yesterday,
To me,
and
what
like
you're
last
really
night when I
seeing is
slept,
selling
I
pressure
noticed in the
and
middle
really
of the
have
night,
to
like I
think
woke
through
up, my
allocations
nose
are
was
in these small
my
and
nose was
mid-cap growth names. If I
like
look
really
at like an
stuffed up.
ARKK as
So
like an overall ETF,
and just in a
like
few hours, you could
Square,
tell a
a
huge
Unity,
difference.
a lot of those names, Scott, are down 15% in 3 days. And so to me, that's
So,
where
like
you're
I said, what
really
I'm going to
seeing a
do
lot
is
of
I'm going
money
to go
coming out,
through a
because
few
those are
charts
very, very short. You had
and
short
just
covering, and you
see
had the
what
Feds,
we
you had the
can
market saying
find.
6 to 7 rate
So I'm
cuts.
going to spend
I've always believed
spend
that I
these
think that
these
6 to
next
7
few
rate cuts
hours
is too aggressive,
doing.
and
So if you
you're seeing a
guys have
lot
any
of money
questions or
coming out of
anything, you
that.
guys can throw them in
I
the
think
chat.
once the CTAs
And I'll
who've
just
been
be
very, very levered long, let's see
here
what happens
zooming
with that.
through
That
some
could cause some more
charts.
pressure. But I agree with Joe. The narrative for the year, I mean, we're in a presidential cycle. That's positive. The soft landing is still in place. So I think that really you have some repositioning, especially within those small and mid-cap growth names. But I love Steph's moves, though. I think that these companies were, to me, very consistent with Steph's move, have a very high free cash flow yield. And to me, that's going to be a consistent narrative over the year of being able to generate returns outside of these 7 names that we spend a lot of times talking about.
Of the 7 names, though, Bryn, I guess the central question is, how much do mega cap multiples?
I'm gonna go grab some Pop-Tarts real quick, guys. Give me 1 second. Like, I want to go get something. I know my stomach. I need to get something to eat, but I want to wait until, because the FOMC minutes come out at what, like 2 o'clock.
A year ago, Apple's valuation was 20.5. Now it's 27.5. Now yesterday was more than that, but it's down.
Yeah, 2 o'clock.
Again.
I can wait.
The 10-year average is it's less than 19. There are a lot of stocks in that boat. Microsoft a year ago 23. Today it's 30. The 10-year average is 23. So how much more do those multiples need to correct?
You got to be really careful. Multiples are a terrible metric for timing.
Everybody keeps saying that. I hear you on that. I heard that 2 or 3 times yesterday as well. But the bottom line is, if there's a view that these multiples are extended, they need to correct to something before people deem that they're going to jump in and buy the dip.
Well, I think you have to separate these names. And so when I look at Apple, which I own, which everybody owns, it's like Tim Cook is amazing. They have a great team. But the bugaboo I've always had about Apple the past couple of years is outside of COVID, pre-COVID and now post-COVID, their revenue growth is around 3%. They make a bunch of cash, they buy back their shares, they have a flywheel, et cetera. But ultimately, the expectations for Apple's revenue growth for 2024 is just 3%. So does that deserve a 30 multiple? I mean, we'll see with the market. That seems kind of high to me. As a juxtaposition, NVIDIA, to me, cheapest names, because not only did they have 18% revenue growth for 2023, but growth. So I could separate the two and say, I believe NVIDIA's revenue growth is going to come in, but if it does, that stock is actually one of the cheapest of the mega caps because of that really strong revenue growth.
I want to bring in, since you mentioned NVIDIA, Joe, since Bryn mentioned that, there's a note out from D.A. Davidson that deserves our attention today. What if AI is just another cycle? It'll love it, but they go deeper, and this is where it gets controversial. We believe our expectations are unlikely within the next 2 years. What if ask? NVIDIA may be vulnerable as AI hype approaches the illusionment. Powerful cold water words.
Okay, so
on a stock that absolutely ripped more than 200% last year.
I want answers in you would. The first thing I would respond to that is I completely disagree with the premise, because for that to unfold, you have to believe that the overwhelming amount of spending that currently right now is going on with the mega cap companies, with all these companies pushing towards advancing the innovation, right? And remember, these are the world's strongest financial corporations. We know who they are: Alphabet, Microsoft. So you have to believe that they're going to stop spending on buying those chips from NVIDIA, and I just don't think that is the spending continues. But the other thing that's important, and it goes back to what Bryn was kind of talking about, you have to remember something, in particular as it relates not only to the Mega Cap 7, but the semis. In September and October, everyone on this desk sat here and talked about performance that they believe was going to happen in the fourth quarter. And it did happen. And it began with the semis and mega caps, and it broadened out a little bit into the other 493. There is no way you could present me the evidence 2 trading days into 2024 that we have worked off the
Sorry, I was like, let me get one last ditch effort to see if I have any Pop-Tarts or anything. I'm like, because like I'm like, man, I want to hold off. I got to go run to the store and get like, you know, something to like have that I can just grab to munch on and stuff. And I haven't been because it's been the holiday. I got Doritos there, but I don't want that. I don't really eat that stuff. Let's see. Let me fix this real quick. AirPods are on. Why is this not playing?
Everybody's on the same side of the boat right now with all of these names. There was massive chasing going on.
But I'm back. I'm going to fix the camera. Give me 1 second.
Underperformance, and so
fix this
everyone
stuff.
was really kind of just jumping in. I think that these stocks take a breather. I think we all have to figure out, is there double and triple ordering happening? That is a big question in my mind. And so could we see bucket filling kind of thing? Sure, absolutely. Could these stocks correct 10, 15%? Sure, they're still up massively from last year. And so I don't have a problem taking profits. I don't have a problem taking profits in a Broadcom because I've made a lot of money, but that valuation is very reasonable to me, 23 times forward. And their AI business is going to, they've guided anyway, to go from 10% total revenue to 25% in the matter of 2 years. And so they obviously see the demand, but that's the question. Are we getting, or are they getting, double and triple ordering? On Lam, totally different animal in my opinion, because wafer fab equipment spending doesn't really necessarily have 100% to do with AI. Some of it, obviously, but wafer fab equipment, we're hearing from the spending,
it's red.
from all kinds of companies. We heard from Micron just
wonder what that
weeks
means.
ago that it's bottoming and that numbers are getting revised higher. And that stock also, even though it's re-rated higher, it's still only at about 28 times.
Sorry,
I think
if you
very
guys had
reasonable.
speakers.
On a pullback, I'm much more
Or
inclined to add
headphones.
to both of those two, but I have no problem taking profits. And if you need the cash to buy some of these other names that are starting to outperform, meaning the broader market at large.
Brent, I got to hear from you on NVIDIA. I mean, you've been in it a long time. You were early in it. What about that note and that question? What if AI is just another cycle? Implication being like, yeah, there's so much hype. Nowhere was the hype more acute, you could argue, than NVIDIA. But, you know, what if these expectations are unlikely to materialize as they ask?
So to think about hype, you would think that there's nothing behind it. So as I said earlier, NVIDIA had 100%.
All right, so what I'm going to do is I'm going to go through some stocks. If you guys have any, that you guys want to watch, or if you want to watch CNBC and listen to these guys at lunch, they're good to listen to. They're good to listen to at lunch because they'll give you guys some ideas. Yeah, if you guys have questions or charts or anything you guys want to throw up, that's fine. I'm going to go through some stuff, and I'm going to let this play for a minute.
They're trying to monetize that. Obviously, Microsoft's trying to, but I just think that this is going to be a long 10-year spend. Jensen thinks it's going to be $1 trillion of data center rebuild that happens over a decade. So yeah, does it happen just in 1 year? No. Can, to your point, or the note's point, the stocks get too ahead of themselves? Sure. But I think trying to time that and be cute about it.
For the record, 3 trades, 3 green trades. Just coming into this year with a 0 loss, having to stop out. I just thought about that.
As the market, to his point, has not wanted this stock to get over 500, and it shuts it down every single time. But I think that this is not hype when you have the 3 biggest companies in the world buying billions and billions of these GPUs.
Yeah, Steph, you know, a key question is undoubtedly going to be at what level, forget the multiples, but the prices, just price coming down in some of these names, attract buyers. Alphabet, now green. Joe just pointed that out. Microsoft, now green. We'll see if it lasts. But you have to believe that at some level, believers are not going to let these stocks go down too much.
Sure. So I'm inclined actually to sell the rest of Apple. So I know you didn't ask, but I only own a 50 basis point position. I would be more inclined sell that because it's too expensive for what you're getting in terms of growth. You're not even getting growth in their iPhone business, which is 50% of their total revenues, and services is about to start to decline and decelerate. So that doesn't make any sense. I take my money and I put it elsewhere. What name would I actually?
So there
go
is
right
people
back into Meta, but it would have to come down.
that I've seen that are being frustrated with NEXPI or NEXI. And, you know, what it tells me is that they haven't done or they don't have the analysis to go back, or they haven't really done the analysis to look at the daily chart to see the risk to reward doesn't make sense at this point in time, right? I mean, what do we say? 1386 it was, but you're coming into $10 right here, 992, 999. That whole area is resistance, right? So are you going to buy this thing at 770? What did it do? Did it just break down? So now here at $7, it might make sense for somebody to get in to try to take this thing from $7.50 to $9. That's a little bit better than trying to buy it up here, but let it consolidate and then see if there's a squeeze in the afternoon on an increase in volume, and then we'll see if it can break 10 and go to 14. That's how I would be trading this. Or the other side to that is that the volume dies down and this stock just dies off. But it's holding up very well. I don't know if there's any news. I'm sure there might be. Sure there might be. Let's see. Nexium NEXI stock increased 84% to $4.38 during Wednesday's pre-market. The market value for their outstanding shares is at $4.6 million. Oh wow! So it's not going to take a lot for this stock to move. Outstanding shares is 4.6 million, and let's go to a 15-minute chart. I'm sure this company's already been bought and traded twice. What do we have here? That is 16 million shares. So at $5, $6, $7, right, on an hour chart, they've done this. They've done their market cap probably 2, 3, 4 different times.
Becomes, Scott, when you look down the road, and that's where the differences seem to widen up. The market has something like
guys, I'm just going to leave the thing. If I'm frozen, I'm
built
sorry.
in this year.
All right, let's go through some
charts. There's still time for the markets and the Fed to come together, and maybe they meet in the middle, or maybe one side goes all the way over to the other. But ultimately, there's going to need to be continued progress on inflation for the market to be right. And I think the Fed has this view that these numbers don't come out in a straight line and don't behave in a linear fashion. So I think that there may be sort of sided a little bit with the Fed on this, that there's going to be sort of obstacles along the way.
That drop was insane on Apple.
In a little more than an hour. I know you got to get over to the Fed, so we'll let you bounce.
A lot of these names, man, they just fell out of bed.
Our senior economics reporter. Joe, I don't know. You know, hikes do feel like they're kind of off the table, irrespective of what they say. It feels like they took them off the table, they put them back in the pantry. They pulled out the cuts, put those on the table. It's just a matter of how many you may get.
Right, and how soon you get them, I think, is also incredibly important. Look, I think at some point, and I think it's probably in the first half of the year, I think we're going to be talking about some form of a growth scare. I think the consumer is going to bend.
I think 182 is your target for Apple. I think 182 is a nice level to
it's probably a little bit more compelling.
See if you get some buyers in there.
Component of your portfolio than equities.
If, you know, like right now you can see here, at least I can see it, you may not, but right here at this 183 level,
yes.
Let me make this bigger.
Well, as I said at the beginning of the show, I'm a believer when you have
what do you
this
see?
Collective activity, you have to have a shopping list. You have
right
to have
here, 183, it was support, it broke it. Now what's it doing? It's going back into 184. I'm sorry, 184. And it's broken it, and like now this candle here is testing it.
in trading activity
and
be
you're starting to
because
see
there's been
the
this
trade line go below VWAP, and I feel like if this has one more push to the downside, I wouldn't be surprised if you do find some buyers down here at 182. 182 is going to be crucial, because if that doesn't hold, then where is your next area, right? Where's the next buy point? Down here at 170? It's a pretty big move. Then that means we're early on the downside. So,
Bryn, you have a take on that before we take a quick break?
we could put on a hedge. We could grab we could go out some days and get way out of the money, but you got to know if you, the farther you go out of the money, and that's why people lose money trading is because they sacrifice price for time. And sacrificing price for time is saying, I'm not going to buy a 180 put because it costs more money. I'm not going to buy the 175 put because it's too much money. I'm going to buy the 162 or the 170, right? Instead of saying, let me pay up whether I got to buy one contract and it's everything or whatever, right? You're getting time and you're getting closer to the money, and that percentage, let's say if it's $400, let's say if it's $300. $300, or let me rephrase that. 20% on $300 versus 20% on a 20-cent stock, or 50% on a dollar option. Which is more? And the other one, you have time. Your percentages, you're going to make more because the smaller percentages are going to equal more money, right? And I think a lot of people haven't experienced that enough. I'm not saying that that's how you guys trade. I'm not saying that's what you guys do, but just know that there are people that just live off of weeklies and dailies, and they don't know what they're doing. They really don't. They think they do, but a lot of them haven't put in the work, the actual work. And that's what's going to separate us. That's what's going to separate us from the pack, right? We're going to know our risk, right? We're going to be able to make more when we're right than lose when we're wrong, because we're going to know that we're going to allow this thing $1.50 for a stop loss, and we know for every dollar we're going to lose 50 cents, 60 cents. So we know if we're going to risk $200, we're going to be buying 2 to 3 contracts, if that's your risk tolerance. And we're going to give it $1, $2, wherever in accordance it is. If we have $1 and we're going to lose 60 cents in that dollar range, and our stop loss is, and our max loss for the day is $200, then we know we're going to buy 2 contracts and still be under our risk for the day of $200. Okay, and we're at $1.20 there, and we're going to do that, and we're going to give it the room that it needs, and we're going to make more when we're right than lose when we're wrong. How do you do that? How do you know how much you'll lose at each dollar, $2, whatever, and also the time. There's that time aspect. There's that time aspect as well, right? Because you can cut that down. Let's say if my delta's 60 cents, I know for every dollar I'm going to lose 60 cents. But how much of that delta is, let's options chains right here on Apple. Apple's not that volatile, so it's not going to be bad. Now look at this, for instance, right? So if I showed you, let's look at the put side, right? Let's look at the put side right here. We'll look at the 182.50 puts for this week. Okay. So you have 69 cents, a 69-cent bid, a 70-cent ask. Pretty tight spread there. Awesome. Liquidity, sweet. There's a delta of 22. So it's going to change, right? Or no, 33 cents. Is that it? I think that's it. Yeah, 33. I'm sorry. 33. 33 cents. So if I take you from 70 cents and a delta of 32 cents, call it 30 cents, right? That's nearly 50% of your option price, right? You're paying 70 cents. Your delta is just say 30, right? So therefore, you know every dollar you may make or lose 30 cents, right? So I want you to think about that. Let's say we spend 70 cents and our delta is 30. I'm just using this as an example because it can go further than that, because I could take this down to every half hour. I could do it for every hour, half hour, 6 hours, okay, by the day. But this is just going for the day, depending. Again, you got to know your Greeks, because they all, whatever, you know, they all contribute to each other in a sense. But I can have an understanding by how fast or slow that Apple moves. Okay, so me just using Delta, I've been doing this for a long time. I may know what I'm doing, just in case you don't. So if I'm buying, again, if I'm paying 70 cents for a put on Apple, I'm not even going to worry about the strike price, 182.50. So I paid 70 cents. My delta is 32 cents. So I can say, therefore, 70 cents every dollar I can expect to lose. If it goes against me, I'm losing nearly 50%. Versus, and the same if it goes in that direction, I will make nearly 50% in that dollar, right? Now let's look at the strike that's in the money or at the money, right? It's $1.77, but the delta's higher at 60 cents. Okay, the delta is 60. We'll just say it's at 63 right now. We'll say 60, and we're paying $1.80. Well, that's about 25% volatility, right? Because we're not at a 50% volatility now. We're at a 25%. We're paying more, right? Now, if we're wrong, we're going to lose less. On paper, it may seem like more because the 182 puts, the 182.50 puts are 70 cents. Your delta is 30. So let's just cut it in half. Call it 60 cents is 30 cents of 60 is 50%, right? 30 is 50% of 60. So call it 28, or I'm sorry, call it 45. You'll lose 45% roughly, 40%, 45%. But if we have $1.85 with a delta of 60, like 60 plus 60 is 120, we're not losing 50%, right? The one that's out of the money, for $1, we are risking nearly 50% buying out of the money. If I buy in the money, I'm spending more. I'm spending $1.80. And if I allow this to go $1 against me, I will lose 60 cents on $1.80. On $1.80, that delta would be like 90 cents, but it's not. It's not. So right there is managing the volatility of your portfolio in a nutshell. In a nutshell. And a lot of people don't do that. They have these extreme volatilities where they buy weeklies or dailies, and they're buying out of the money, and they're not doing the math and understanding what really is going on and what's best for them, right? They're not saying, all right, you know what, I'm going to pay a little bit more because I know if I'm wrong, I will still lose less. So somebody that's buying the 182 puts, and that's if it goes against you, right? Doesn't mean that it will. Maybe you make money, that's fine, but just understand what I'm telling you right now by using the 182.50 puts versus the in the money 185 puts. I know I can lose 63 cents on $1.80. Percentage wise is better than if I were to pay 70 cents and lose 32 cents. That's nearly 50%. Okay? So, and guess what? You know what's funny about that? Let me see here, 670. See, so it's dropped, but a lot of people don't do that. They kind of get, and then what also on top of that, where's the volume? Where's the open interest? And your open interest is going to be, you're going to know where they are in accordance to how much they are. I'm sure there's a ton of people ready to spend 8 cents. Like, look at this, 177.50, right? They're paying 8 cents for it with a delta of 5 cents. That means they're losing nearly 80% of their money just on a dollar. They're going to lose 5 cents of that 8 cents that they've spent. Does that help you guys? That's on here. Do you guys see what I'm looking at and like understand what I'm saying? If I'm saying it, you know, almost $7 to say and $2 today so far. My long term is getting abused. Let's fix it, Chris. Let's fix it, bro. I'm telling you, man. Put your faith in me. I will help you fix it. I can't guarantee by law. I'm not going to get myself in trouble. Like, I'm not an RIA, but I can help you guys. I promise. I am not down. Like, I have 3 green trades. Even if I lose, I will lose less because I understand these things, right? If I know, let's say if I wanted to get short Apple right now, all right, what did I make today? I made $30, $60, whatever it was. Well, I may have made like $35 again. It wasn't about making money on that trade. It was about showing, more than anything else. And practicing. But anyway, like if I were to go short Apple right here on this chart at $1.84 right here, right? Like right now it's starting to rise above it. I would say to myself, depending on what happened earlier in the morning, if I've made money in the morning, I'm not going to be in a rush, no matter how much or how little that money was. I'm not going to try to put myself in a position where that gets taken away from me and I've made no ground, because a lot of people aren't happy with they don't buy stock outright because they're saying, oh, it doesn't make sense for me because I don't have 25 grand in my account or more than 20 grand. I'm under PDT. I don't want to buy the stock outright because then I'll only have 3 trades. And even then, I'll only make $20 or $15. They're not happy with that because they're thinking about the now and not the 5-year person, right? And then that same person will be the one that will sit there and buy 177.50 puts with a delta of 5 cents and paying 9 cents for them, going to lose every dollar 80%, right? Because they won't. Let's go to the time. Let's see, that was just a weekly. That's not a time factor. Let's go to the 12th, right? Oh, look at this, right? 185 in the money is 168 for this week. Look at the 182.50 for next week. That's $1.50, right? So you're paying less for time with a delta of 37 cents on $1.50. So you're not going to lose 60 cents on a 185 put on Apple. You're not you're not losing. What is that? 170 right now. It was at 180 and the delta was at like 60 cents. So now we've gotten the delta. So now we've managed our risk by getting next week's. We are getting 50 cents out of the money, or what is that? 185. So it's a 182.50 put. We are a few dollars out of the money, but our delta, but we have managed, we are paying the same as a weekly. We're $1 out of the money, but we have time. So therefore each dollar is not going to hurt us in that movement. Now, the more dollars it moves, and as we get to the end of the week, of course, that delta will rise in accordance to the closer we get to this Friday and then to the next Friday, right? Because right now you got a week and a half. So this looks like a good deal. If you think Apple is going down, you would wait for that bounce wherever you think that is, and say, I like the 182.50 puts. I'm going to spend $1.50 and I'm only going to lose 37 cents. Instead of buying this week's 185 puts at $1.60, losing 60 cents. So you've cut your risk in half. You cut the volatility of your portfolio in half by giving yourself more time, and you're paying 50 cents, or you're paying 10, 15 cents less, $10, $15 less, right? For an extra week. Yes, you're out of the money there, but you've cut the volatility in half from what we talked about, the 62, the 182.50s at 62 cents, losing 30 cents a contract for every dollar. That's 50%. And then we bumped it for the weeklies again at 185 in the money, is at 170 right now. With the 60 delta, you'll lose 60 cents for every dollar, roughly, depending on how fast or slow it gets there. And we went out to next week. We gave ourselves more time, and we got a delta of 37. So we are no longer talking about 60 cents. We're no longer talking about 50 cent volatility, 50 cent loss, or 50% loss. Now we're talking about, like, for every dollar, you know, it's went up a little bit now because the stock's going higher. It's at 37, call it 40. You know, we're talking about and I'm saying, like, if my stop loss right now was up here at, like, this area right there, right? I'm going to lose 37 cents. It's at $1. It's Apple's at 184.10. I'm going to give this thing 184.40. I'd call it like 184.50. Like for me to know that I'm wrong, the stock would have to start closing above, like, this area right here and start closing there. Then I would know, hey, we're going up to 186. So I'd give this a little bit of room. I've got a week and a half. You have the FOMC minutes. I can let this thing move. I can sit in my seat and not be sweating. I've paid less. I've cut my volatility by half, you know. And I don't think a lot of traders do that. You know, that's just my opinion. $7 yesterday and $2 today. So, you know, I feel like, you know, going over stuff like this, because you can use this in accordance to where your entry is at. You know, like, obviously this isn't really a trade, but if it was a trade, like, I would give this thing right now, it's at the area where it's not going. I don't think this stock is going to reject this area. But if I wanted to put risk on for a little bit more downside, I would have to, my best bet would go out to the next week, $1.80 to 182.50 puts, you know, and my target is 182. So I would be in the money. So at that point, you're talking about these things going from $1.50 to like $2.25, right? 220. And again, listen, $1.50, 150 to $3 is 100%. So we're looking at a 75% from if Apple were to go from here to here, we're looking at nearly 100% trade on the next week 180s, and we'll have time. So therefore, that premium will still be building up a little bit, because as this comes down, you know, it's going to until we get to $1.8250, then we can say, hey, it's going to be dollar for dollar every dollar once we're in the money. But from this point to the 182.50, you know, we're looking at that nearly 100% move there, you know, if we get it. And now if we wait to get it up here, or up here at the high of the day, where we say, hey, this thing is definitely coming back down up around that 185. It's clearly rejecting up there. Let's go with the $1.50 next week puts, because my target is 182. You know, so that's all. Just go through your chain. Go to next week's. Start using your Greeks. Start using your Greeks. It's important. It really is. It can help you manage your losses. And you'll start to see, man, like, because here's what I was told. Like, if you guys are trading and stuff, need to put yourself in a position as if you're on a prop desk, right? You need to give yourself a volatility standard. What is my volatility for the day? What is my risk? When I say volatility, I mean risk. What is my risk for the day? My risk is going to be let's just say $500, right? I'm going to risk $500. That way I know if I'm risking every day or all of my trades, my risk is the same. I mean, like they say, right? If you were to put it on a chart, your losses should be really tight. If you were to like dot it, like you see those charts where they have the dots and it's a slanted line and the dots, they should all be, your losses should all be in one little area. And here's your wins, right? All like they're going to be spread out because you're going to be taking profits along the way, and some are going to be bigger than others, but your losses will be in a square, right? And it's just like if you were to have a line in the middle, your losses should be like dotted, all close together, right? $75 here, $1.25 here, 50 cents there, and your wins $1.25, $2.50, right? 75, $3, 80 cents, like it should be like a range, but you're keeping your risk tight. So, just thinking about that. And knowing, you walk into a proprietary, you walk into Goldman Sachs, where they're going to have a volatility of they're going to have a volatility manager. They're going to have their risk manager say, you're risking $1,000, but at what volatility is that $1,000 being risked? Like, is this one trade? Obviously their standard is probably anywhere from 5 to 25 grand, right? For their risk, if not more. Okay, but what is the volatility of that, right? What's the volatility of that risk? Like, are we going to be sitting comfortable and let this thing move and not have to worry about hitting that stop loss in a few minutes, right? Thinking about the volatility. So, and in another sense is would you want to put your money with someone that is risking 50% every trade versus someone that is risking 15%? Because who do you think is going to last longer, if I were to ask you that? I think we all know the answer to that. Because it comes down to math again. Why is it that the 50% volatility person instead of the 10 to 15% volatility is because he's going to have to be right a whole lot more than he's going to be wrong, and it's only going to take him 2 trades at 50% volatility to be at that 100, to be, whether it's not necessarily the whole account. Let's just say they use 5 or 10% of the account. 2 trades, that could be gone, right? Where with the 15 to 20%, you have, let's just say 20, you have 2, 4, 6, 8, 10. That's 5 trades instead of 2 trades at a 10%, using 10%, right? Just as an example, there's a $100,000 account, and you're using you have 10,000. You're using 10% on risk on each trade, right? Not risking it as your loss. That's not. It's obviously not your loss. Your stop loss should be about $500 to $1,200 on that 10,000. But 10% of that portfolio, a person who is at a 50% volatility versus somebody at a 15 to 20% volatility is going to outlast and have more of a chance to perform and perform better than a person with a 50% volatility. Because again, if you're at a 50% volatility on that 10 grand, 10% of that on of that 100,000 account, 2 trades and you're done, right? Whereas, to be wrong, the other individual will have 2, 4, 6, 8, 10. They'll have 4. They've doubled it, tripled it, really. So think about the volatility and not just the amount that you're going to lose on your trade, right? You guys should start thinking about that, because it's important, and I don't think I've talked about that enough, right? I've talked about managing your risk and stuff like that, but to what degree, right? To what degree are you able to let yourself sit in a trade and not be just like, holy shit, like I just spent $2 a contract and I'm fucking down. I'm down half of the position, and it's been a half hour, right? And the stock hasn't really moved. It's very easy. Just go look at your delta. Just to make it easy, just go look at your delta and say, you know what? This has got a 30. This has got a negative 30 delta. I'm in puts. I know for roughly every dollar, and you guys know the speed in which it gets to those areas will play a factor. But using that can really help you see which ones you should be in and not be in. It's important. I do it. You know, I do it. I have to do it. I know, because I know if I don't, then I don't know how much I'm actually risking if I'm wrong. If I don't know what the delta, if I don't know what my Greeks are, if I don't know how much I'm going to lose from where I enter to where my stop loss is. Why am I not? What is going on? Okay. It wasn't coming up. I don't know. Hopefully you guys learned something there. I think it's important. I think it is. I mean, it's not that I think, I know it is. I know it's important. Because that's going to be that's going to separate the people who last and can withstand a few losses and those times where the market's kind of like you're just not on the same ground and you're struggling and struggling. It's like that's going to help you not lose as much money to where you can still be in the game and it not take like 2 to 3, 4, or 500% trades to get back to break even. You know, it's important because if you're losing 50%, 30%, it's going to be really tough. You can't put that pressure on yourself to think that, you know, the market's going to offer you, unless you just sit back and wait for those home run trades. You know, you're going to be waiting around sometimes, and then you're going to like think to yourself, you're going to second guess yourself too then. Right? That's also the other part. Allow yourself to say, yeah, I like this. I'm going to take this short, like what I did with JP Morgan. I said, here it is. I see it. I like it. I'm taking it. And I was also using it as an example because it was a nice setup. So it just make it easy on yourself. I'm telling you. Just take a look at the next week's options and just do exactly what I did. You know, like this. What are we? We're still on Apple. Now look what's changed since it bounced to VWAP. Look at this. Remember what we said. All this stuff, all Apple did was bounce to VWAP, and look how much down they are for anybody that is in this. Look at the 182.50s. They're at 58 cents with a 30 cent, so it's still 50%, but what was it? 185.60. I thought it was the 183.50. So 58 cents and a 30 cent delta. So now they're losing more than 50%. Pretty much. It's kind of right now it's at a point where it's like it's equal. It's about 50% right now. But therefore when I looked at it and it made that move to VWAP, like all the stock did was bounce back, and you're going to have pullbacks. And that pullback, and this is the other part, right? Anybody that was in those trades, in those puts, they made money on the downside, and then all the bounce back, this is the other part to this. The bounce back is what ate up all their profits, and now, once it goes back to where it was, they're still going to be down money. They're still going to be down. So it's really important. It's really important. It's important to, like, you know, put yourself in a good position and just know what you're doing. That hurts. That's crazy. I know for a fact on that big candle, those deltas were, that delta was, the price of this versus the delta was really bad. CoinDesk? You mean Coinbase? I don't know. yeah, look at this. This is, you want to see a stock that will chop up some data and volatility. Come on, why can't I do this? Nice. I hear you, buddy. Yeah, you too, Chris. You too, bro. Hopefully that helps a little bit, man. Hopefully you're able to understand. If you weren't, you know, just send me a message on Twitter or something, and, you know, it can help. Because I want you guys to make money, you know. I do. The market can offer you a lot of... It's one tool that can help you get to where you want to be in life. It's one of the tools out of many. But yeah, man, you hit it hard, bro. Hit the gym hard. You have a good rest of your day, man. I appreciate you swinging by, Chris. It's always good to talk to you. So what I'm going to do now is I'm going to go see. Let's go check out what the market's doing as a whole. Let's go check it out. Let's go see what movers we have. All right, so this woman saved $48,000 over 8 years by giving up alcohol. Nice. All right. You know what? So like all this news is really trying to like put some fear in you. They just won't let, they just Middle East, China this, China that. They're trying to give you every reason why the market should pull back. Hopefully my thing didn't die. I think my computer died. Not this one here. Damn it. I meant to, I thought I plugged it in. Damn it. Darn it. Oh, there's some more layoffs. Xerox to cut 15% of its workforce. Job openings. Let's see here. So I guess they haven't released it yet. Just to see what's... They will usually post on here some of the midday names, but... Susan, have any stock? Let's see here. Let's go to Finviz. Let's go see what we got going on today. And if you guys don't know, too, here, you guys can change this from a 1 day, 1 week, 1 month performance, too. Let's go to full. I know, you got to throw in an ad with another ad. All right, so healthcare is our leader today. Eli Lilly, right off the jump. Eli Lilly and Berkshire Hathaway. Looks like your two winners in Verizon. Netflix isn't doing too bad, too. Let's check out Verizon. I mean, not that it's something that I would go long because it's already done what it was going to do. Oh, so it was off of a gap up. Yeah, I would wait for a pullback on this. So, Verizon's actually a funny stock because... shit, I didn't mean to click that. I used to own Verizon, and I owned it for quite some time. It was a nice one that paid dividends. I liked it better than AT&T. And I got it at a decent price in the 50s, and it went to 60s. And I got rid of it. And it's a good thing I did. Because right after this double top here, this is when everything just hit this, you know what I mean. You guys know what I'm saying. Like, just shit hit the fan. This actually looks like a really nice setup. Actually. So I wonder how well if communications could be, let's do a year to date. So this thing is down year to date, right? We have a lot of stocks that are up. I wonder if some of these communication names can get bought up and go higher with the rest of the market. So, let's see, open. Okay, so this thing is flat. This thing is flat, basically. It's down 1% on the year. It's up this year, right? But compared to 2023, it's year to date, it's down. Oh man, that sucks, man. I did not mean for this computer to... Alright. Software. Microsoft trying. It's about flat. So we have energy, healthcare. Pretty much looks like down names, right? Financials are down. That's going to put a hurting on the Dow. Goldman Sachs is one of the bigger weightings. That's down almost 2%, 1.8% today. Let's see here. Netflix, Disney, all entertainment names, packaged food, consumer defensive. God, why can't I remember? Where is... I'm looking for communication services right here. Telecom. Look at autos. Autos are just hammered. Home improvement down. Wow. Oh wow, another ship. I know they've been talking about it all day, but I don't know. I think they just want to mess with Joe personally. It just sucks, man. We were out of, like, it felt like things were okay. And then you get some of these politicians back in office, and then now it's like, here we are, back in the Middle East. What's new? We got out of it. We were out of it for a while. People don't know what that's like. And now here we are. This is, right, back to the norm. Let's see here. So this is a major resistance level here on Home Depot. If we can't reclaim this level, I'd like to see 340. Again, it's got to be an area. Let me make this wider. Let me go over this real quick, and then I'll talk about it after the analysis. I can't even see if there's anybody even on because let me turn on this computer.
Percent again, right in the middle of the trading range so far today. The Dow Industrial is down about 0.5% as well, 37,569 the last trade there, and the Nasdaq Composite at 14,662, which is again, as Kelly mentioned, the underperformer on the day, down nearly 0.75%. Kelly also mentioned some of the Middle East tensions, the Middle East issues happening because of what's happening in the Red Sea, the Suez Canal region. All of that, in addition to U.S. interest in refilling the SPR to a certain degree, 3 million barrels or so, is propelling oil prices for U.S. benchmark West Texas Intermediate. WTI crude's up about 3% now to $72.57. And we're sitting just at about, from these levels, $95 to where we are here, roughly about 24% to the downside. So we'll keep an eye on that move in oil prices and whether there's sustained movement higher in some of those prices. And then the technology trade is fairly thematic with regard to the underperformers today. Enphase and First Solar, the two new energy, renewable energy stocks that are really facing some downside. First Solar and relative outperformer after analysts at Mizuho call it their top pick in renewable energy. Enphase is down 6%. Meanwhile, on the semiconductor side,
there was a big
Skyworks, Qorvo, some of its
the
chip
sun
names
was
that have been talked about as
the
part of the
monitor.
Apple supply chain. Still
Look
kind
at
of
Home
reeling
Depot,
from that big
man.
downgrade
Wow.
from Apple yesterday by analysts over at Barclays. That's having
$68
reverberations today. So those chip stocks, among those down nearly
back in
2%,
99,
so keep an
2000.
eye
Look at that
on
run,
solar
guys.
stocks
That is
and those chip
insane.
stocks tied to Apple.
Look
Kel,
at
I'll
that.
send things back over to you.
All right,
35
is bad
to
news,
4.
bad news again
Holy
for the market.
shit.
Manufacturing activity and job
Home
openings
Depot's a
remained at lower
beast.
levels in
I
the
guess
latest
that's all
data this
over with
morning.
now
And we'll
because
get more
it's
clarity on the
obviously
Fed's thinking
grown.
from
But
that last
this is
meeting,
what we
which
got to
had those
find, the
dovish
next
rate
big
hike
winner,
projections
man.
when their minutes
We
come
got
out
to
at the
find the
top of
next
the
big
hour.
winner. It's
Steve Leisman is at the Federal Reserve with more. Steve, what do you make of it all?
awesome.
Well, we got the soft
All right,
landing
we're
scenario
back.
this morning.
We're
Kelly
good.
got a little bit of
Awesome.
help from the economic data with a decline in job openings and the quit rate, along with the manufacturing
All right, so the monthly
reports
chart
showing
isn't that
easing
oversold.
inflationary pressures. Take a look at the data. The ISM manufacturing, it was up 0.7 to 47.4, but it's the third straight month it's indicated a contracting economy that is below 48. ISM, the index, though, the price index, it declined, and so that's a good measure for the inflation outlook. Job openings, the Fed looking for easing in the labor market, did get a little bit, 8.79, lowest level since March 21, but still well above the pre-pandemic level of around 6 million. The quit rate of 2.2% also declined back more towards normal. Now, Richmond Fed President Tom Barkin this morning, perhaps giving a preview of what those minutes are going to say. Yes, cuts are penciled in, but no, they're not guaranteed and may not come as quickly or as extensively
I
as
said the
markets
same
expect.
thing.
Yeah, Barkin saying a soft landing is
I said the
increasingly
same
conceivable,
thing.
but not inevitable. There's a potential for
And I'm going to tell you
remain
guys something.
on the table, and cuts depend on inflation easing. About that, he said, well, weaker demand or more Fed hikes may be needed to bring
Just 1
down
second.
inflation. And the recent decline in yields and the rise in the stock market, it's going the wrong way. It could stimulate demand. So he's a little bit nervous. Markets unfazed, trading with a 74% probability of a March rate cut. They priced in a quarter-point hike at most meetings after that. So the January 25 contract, that's the one we look at for the full year, shows 6 full cuts baked in, with that current yield of 3.84. That compares to the average Fed official who's baked 3 rate cuts into their forecast. So like Barkin, most officials have leaned against the market's aggressive pricing, but to little avail. The minutes, maybe they'll do this. They'll do the same, and we'll see if it has any impact at all, Kelly.
We'll see. Steve, stay with us. So my next guest is in the camp that thinks the Fed won't.
So I was watching something yesterday where, you know, you had some real estate agents already talking like this is a for sure thing. Yeah, you know, we're getting this, or like, you know, compared to, you know, at the end of the year, it'll be an 8 cap. It'll be this. It'll be a 7 cap. It'll be that. I'm like, yo, you ain't got a damn clue what the hell you're doing, and holy shit. This is why I say, guys, don't think you need to be smart, because a lot of these people that have made some good money for themselves, they're not that bright. Because any common sense person that knows what the hell they're doing, you cannot. Now, I guess, you know, that's not going to determine whether the person knows or doesn't know what the Fed is going to do next year. They say they're going to. So they're just saying that maybe to sell, right? Maybe they're like, oh, yeah, well, by the end of the year, there's X amount of cuts. Bro, the labor market, if everything stays the same where it is at, and inflation starts to go higher with what's going on, and the labor market is still where it's at, I promise you, rates will not be down. I promise. Unless, you know, we've gotten some time under our belt. But what are you going to, you're going to get, where are we going to be at? We're at 5.5. Where are you going to go? 4.8, 5? Right? You ain't going down to 3.8, 3.2. Maybe we do. But that's not going to come until 2025, 2026. We don't know if something, in order for them to get there, if something bad's going to happen. Now, again, we can look at the Summary of Economic Projections, which is the SOEP that they just released, the year-end SOEP. Now, the thing is if you were to go look at 2020 COVID, right, and then look at now, go see what they thought we would be today at COVID. So what they put out today is not going to be what they assume that they're going to do. They don't know because they cannot predict the future. They don't know if there's going to be a war or not going to be a war. They don't know if we're going to get hit with a comet or not hit with a comet. They don't know if, there's going to be a credit crisis or a housing, you don't know. Times will change, right? It's like trying to predict the future, and you can't do that. So, because they say that they're, I don't see them. Again, I don't know what happened to higher for longer, because all we did was just sit. All they did was raise for a year. That's it. We should be at the longer part right now, which would take us till summertime, possibly closer to the end of next year, maybe. I don't know. I think that they're forgetting that there's 7 to 10 or however many trillions of dollars just given out, and you ain't never had that type of liquidity ever. It is going to take a while for that money to get back into the government's hands and get, and find a home somewhere. Right? It's going to take a long time for that money to get pulled in. And I don't think that they're taking that into account. Now listen. They have formulas. They know what the hell they're doing. I don't know shit compared to what they know. Right? I'm the one that learns from them. I'm just saying that I am curious, because it was just kind of funny how, this higher for longer, and then we literally went 2 meetings, and then it's, we'll probably start cutting next year. We're done. And we went from, this is just a pause, because we went from 75 to 50 to 25, and then we're going to pause and do a last 25. You would think that you would at least get 6 to 8 months when you've had $7 to $8 trillion. It's in liquidity. It's just, we'll see what happens. Now you have all this going on. You had the earthquakes. You have the stuff going on in the Middle East. I know, of course you did. You freaking jerk. The stuff in the Middle East with these ships, right? What does that mean for inflation? Because if inflation starts up again, that's going to be their number one target. So again, the point of this was, I was listening to a real estate call yesterday, and they swear up and down that there's going to be all these rate hikes. And if we don't get it, the market's going to pull back. The market's pricing it in. Go to the CME Fed Watch tool, and it'll give you the probabilities for the meetings. And you could go out to next year. You can go out 2 years, and you could see where rates are trading at. And usually, the Fed wants to be in line with the market. They don't want to surprise the market. Surprising the market creates volatility, and at the end of the day, volatility makes money. They're trying to be in a quantitative easing state when in reality, financial conditions have eased. What I want to pull up is what I haven't pulled up in a while, and I think this is everything to do with why the market is going higher. This right here. Look how much it's went up. Remember watching this at look at this. We were at remember 102, 112, 108 right here, 112, 114. We're at almost 140. Let's see. I think someone said, and I don't believe them because of the way that they were talking, but they said it was supposed to be for 12 months of doing this. What happens if they have to stop this? They're not going to stop it. But let's go look at the Fed's balance sheet, which they're saying that they're trying to unwind, but in reality, they're not. It's just going from one place to another. Let's see here. Because what I want to do is I want to see if there is... Let's see, assets, liquidity, and credit facility. Bank term funding program. That's it. That's it. Let me see here. Let's see. What should I write? How long is the... I don't... Okay, there it is. Program lasting, I guess. Or when is it up? Okay, March 11th. So this is going to be important, guys. We'll have this on our watch. And March is usually a time when the markets pull back anyway. So this is giving us something to look for. So we'll have to see if they continue, like if they say anything about extending it and all that stuff. So the Federal Reserve is likely to allow its bank term funding program to expire on March 11th, 2024. So that would be exactly 12 months from when they started it, roughly, rather than renew the banking crisis era lending program, according to commentary from, okay, that's MSN.com. Is intended as a temporary emergency measure and is to assist wind down unless renewed by the Federal Reserve. Yes. All right. So we have it, March 11th. But do they... Now the thing is would be to see when and if they vote on it and when that is. The BTF is intended... Okay, we know that. All right, so let's read this real quick. So this was another liquidity-driven rally, or really, it allows things to go on and nothing bad happen. No more, right? It allows that there's no run on the banks. There's no banks being like, you're not having a financial crisis. But they need to let some of these things happen to get that rebalance, to get that pullback, right? Because the quicker we get it on, the quicker we can turn it off. You know, you don't want people to lose jobs. You know, you don't want that. But at the same time, when things start to get really, really hot for so damn long, you know, it's better to be cognizant of it and to let asset prices pull back, because it just gets to a point like where we're at now where people can't keep up. The basic person does not keep up, right? Somebody that just goes to work, comes home, and whether they're trying to think about getting a second job or not, they don't, like they're just getting by, you know, with those pullbacks, it allows time to run, you know, it allows some time, therefore with raise, you know, it's just, you have things just go off the handles, and then now the people that actually have money are separating themselves from everyone else in the middle class, and there's this huge gap from the people that have wealth and the people that don't. And the people that have wealth have assets. People that have assets, you know, you got to learn how to manage them. You have to learn how to manage, just like you have to learn how to trade, right? Use whatever the profits you get from trading, use those profits, take half of the profits even. I don't care what you do. I'm not telling you what to do. Use those profits to buy long-term stuff. Buy a few shares with them. Keep that equity going. Keep it that equity curve. Keep it on the upside, right? You see some stocks on the low, like AAL, you know, what I'm saying is like American Airlines. I'm just using it as an example, right? Okay, you know what? It's down here on the lows. Let me nibble and buy a few shares with a few of the trades that I traded today. And before you know it, this thing's at $20 and you got 100% just on the stock, and then you cut it in half. Take that profit, put it somewhere else, and keep that equity curve going throughout your life. I'm telling you, you'll thank me. Oh, wow. She said, hold on 1 second. I think I was talking the whole time and my mic was off. I think. I know I was wanting to go over charts, but I want to read this. She said something. There was a glitch at Starbucks. So increasing rate arbitrage activity in the program virtually ensures that new lending activity will cease on March 11th as scheduled, Wrightson ICAP said. The Fed said it was offering the loans at generous terms to deal with the unusual market conditions that occurred when Silicon Valley Bank and Signature Bank collapsed. SVB Financial, that's so crazy. It's worth 50 cents, guys. That's a shame. That's a shame. Wow. The firm doesn't expect that the Fed will end the firm. Okay. I was like, what? Bank stocks are faring well in Tuesday afternoon trading. KBW, NASDAQ Bank Index. See, I use KRE. A lot of people use KBW, which is the regionals. Okay, KBW. Still looking at this trade. I'm like, man, this could be a nice buy here, guys. Well, the thing is if you were to get something like this on American Airlines, that's an inverted cup and handle, and you would look for it to go further down. All right, let's look at the volume. I could tell you right now. Nah, it's probably not going to happen. To the downside, I think this thing could go higher. But anyway, they're talking about it right now on CNBC about buying the beaten down parts of the market. That's our mark right there. 1345. 1344. That would be a nice resistance zone we could get back to. All right, so KRE again is the regional ETF that I use, the SPDR. A lot of people use KWB to play regionals. Or KBW, I'm sorry. KBW, I think it is. Yeah. Hold on. KBW. Hold on. Oh, KRE is what it is. KRE. There it is. So KRE and oh my gosh, I forget, what did I just do? KRE and then K. I'm not sure. I can't remember. Oh man, KRE and something else. Shit. KRE and I forget what the ticker is. It's not important, but it's the other regional bank index. KBR, that's what it was. KBR, that's it, right there, regionals. Or no, KBR. No, wait, hold on. KRE, regionals. BW? No. I don't know. I'm not worried about it. That's going to frustrate me, though, because I know there's another regional. But anyway. Let me see here. Thank you guys for the likes. If you guys are just joining us, hit that like button. Subscribe if you haven't already subscribed. If you guys have stocks you guys want to cover or go over, throw them in the chat. Let's get it going. It is 1:30, so at 2 o'clock we'll get that Fed meeting. I still had a lot of stuff I wanted to do today. I didn't want to trade this long or be on this long, but it's all good. Really nice double bottom here, looking like some D cups, right? Looking like some D cups. Try to say with the most straight face that I can. So let's see here. So believe it or not, year to date, what are the regionals doing? They're opening up as much liquidity is in this as we think they're getting. This thing's open. This thing's down on the year. This thing's down 10%. So can we get to break even by the end of the year? Start thinking from quarter to quarter, month to month, and a year out. Like, remember, okay, if we start pulling back here and we start holding like this 48, you start seeing a climb, chances are it's probably going to try to go positive because it's been almost 2 years, right? But if they stop this program, things could get serious, and maybe that's why it's not going to go it's not going to go positive, right? Until we find out whether or not the Fed is going to step out of the game and they have to fend for themselves. One of two things has to happen. They're going to have to lower rates, or they're going to have to continue to provide liquidity. and the point is, if they don't cut rates enough, they're still going to have to provide liquidity, I feel like. So, I mean, it's just where we're at, you know? They should have just gotten all this shit over with. I don't even know what their plan was. Like, because I don't think even if they just left rates kind of alone, I don't think you would have still gotten this crazy 8 handle on the CPI and PPI. You went to that area to where it was, and then as time goes on, prices just stay there. I don't think you would have had prices just continue to go and go and go. I don't think that was the case, right? I think they could have left rates a bit lower. It may sound stupid, but I mean, think about it. Like, if things, people were going back to work and stuff, and people were getting the things that they needed, like they would, it's. I know I'm getting stuck in the middle here, but I don't know. That's just my belief, right? I feel like they could have, they didn't have to raise rates so aggressive, because them raising rates aggressively throughout the year did not bring down inflation. Inflation just pulled back itself. The labor market is still tight. People still have money. They're still spending, right? It was just everyone got the things that they needed. These companies got to catch up. China opened up, right? So I'm going to use the restroom and I'll be right back, guys.
Here. Welcome back to The Exchange, everybody. I'm Tyler Mathisen with your CNBC News update. In the latest prisoner exchange since the war started, more than 200 Ukrainian and Russian POWs returned to their home countries today. The deal was reportedly brokered by the United Arab Emirates, which has kept close ties with Moscow since the Russian invasion began. Prisoner swaps aren't new, but have slowed recently. The last exchange happened way back in August. At least 4 state capitals complexes were evacuated because of bomb threats earlier today. State capitals of Georgia, Kentucky,
again, I gotta fix that, so I do apologize.
Targeted, but authorities say no dangerous items were immediately found. Investigations into the threats are ongoing.
Don't worry, they're not talking about much anyway. So, let's go to a 15-minute chart. This is KRE. It is down on the day 2%. Let's go see where JP Morgan is. I'm going to go scan around the markets like gold, JP banks, healthcare, all that fun stuff to kind of give myself an idea on what it is that I want to do. JP Morgan is still up there at those highs. Pullback's definitely coming on JP Morgan. Pullback is definitely coming. I haven't looked at Goldman Sachs in a while. Or Bank of America, for that matter. When was this? October? Man, and look at this move back here from October. I said it to myself that I would not miss this move again. I mean, Goldman Sachs took off, man, in October. This thing went from 290 to 400 from October to December. Again, and honestly, that's a nice double bottom from October 13th to it took a month. It took a month. October 13th to November 15th. It went from $290 to $400. Nearly $400. It's crazy. I have so much I want to do right now. I want to go look at some properties. I want to look at some properties and then that's what happens when you have ADHD. It's like you want to do all these things and you get sidetracked. Not get sidetracked, you just can't focus on one thing. So I got to focus on this. I'm going to go through these charts and then we'll have some time and we'll go through and look at some real estate if you guys want. Would anybody be interested in buying some real estate? Who wants to make money? I gotta log in. It logged me out of my broker. Hold on. All right, so here's the real estate data that's just coming out, guys.
On home buyers, but a little help to current home owners. So the average rate on the 30-year fixed ended the year at 6.76%, lower than where it was 2 weeks ago, higher than where it was a week ago, but still well below that 8% high we saw in mid-October. As a result, total mortgage application volume ended the year 9.4% lower than it was 2 weeks ago, and that is seasonally adjusted. Now, because the numbers for the 2 weeks are kind of messy, I'm going to give you year-over-year comparisons. Applications to refinance a home loan ended the year 15% higher than a year ago. Applications for a mortgage to buy a home ended the year 12% lower. So those who can benefit from a refi, and there's very few of them, but those who can are clearly trying to get in while they can. Home buyers, though, are still contending with very little supply and very high and rising home prices. Now, mortgage rates started this week higher after also edging up Friday and again today. So we're now at the highest level in more than 2 weeks, still in the 6% range, but that is probably why the home builders are not so happy, Kelly.
Well, exactly. And it doesn't take much to move them one way or the other right now. Diana, stay right there. With mortgage demand lower, our next guest says it should rebound as affordability improves this year. Let's bring in Andy Walden. He's Vice President of Enterprise Research at
I'm loving the bounce
Andy,
to 138.
Am I saying that correctly? You do actually expect things, affordability to get better, buying demand to pick up?
Yeah, I think gradually as we move throughout 2024, if you look at the interest rate forecast, they're for rates to come down about 0.5% throughout 2024, should give buyers about 5 to 6% more
look
buying
at this,
power and
guys.
should improve demand.
Look at
And
this.
It's really hard to take too much away from the,
This
the
isn't
couple
perfect.
holiday weeks there, but if you look from
This isn't
October
perfect,
when
but
Diana was mentioning rates got up near 8%, through the end of the year, we have seen demand rebound a little bit gradually. And roughly, if you adjust for kind of week-to-week comparisons, we're at a similar level to where we were back in May, the last time interest rates were at 6.5 to 6.75%. So borrowers very much behaving like you would expect them to behave in a mid to high 6% rate environment.
One thing I always think about, though, and maybe you have the data handy, Andy, or Diana does, but is there's so many
I was
more
looking at
either
this head and
cash
shoulder
buyers or,
on this other chart
people
over
who-
here
to whom this is not the
with the
swing factor.
neckline at
And again, you
400.
wonder how much that has played a role
And I
in the
have
way
a
the whole
5-minute
economy has
chart. Man,
responded to rate
I have
Yeah,
hikes.
I mean,
Nutrition or
certainly you're
something.
seeing more of that. Now you're seeing cash buyers even back out a little bit, but they're certainly making up a larger share of the market just because of the compression you're seeing in mortgage
shoulder,
demand out there.
head,
So a little bit
right
more
shoulder.
cash dominant.
We'll see if it plays itself
world
out
than
here.
we've been in the past, but you're
I'll
seeing
be
some
watching it.
compression in demand across the board.
Yeah, Diana, what would you add to that?
Well, I think it's going to be all about
I gotta
supply,
get something
because
to
when
eat.
you say rates are coming down a little bit, maybe half
Yeah,
a
just
percentage
order
point, do we get
something.
into the high fives at some point? It really depends on the supply, and will the
Wait,
seller,
what?
and we've
Why
talked
would?
about this
Why
so
did they
much today with
pause?
these mortgage numbers,
All right,
will the
MSS is
sellers
going.
finally decide
MLSS
that
is
they're
going
willing
nuts,
to trade
guys.
their 3% or lower rate
Let me see if
up
I can
to
get some
a
info on this.
6% lowish rate in order to get into the market and put more inventory on there. That's the only way we're going to see affordability. But Andy, I don't see that really happening unless rates came considerably lower, which that's not really in the forecast.
Yeah, and we haven't seen that last year. I think that was kind of the thought process. We moved into the 2023 home buying season. Falling rates should improve inventory and sellers' willingness to sell. We haven't seen sellers move with rates at all. You certainly see a very linear reaction from buyers. They react as you'd expect to rates. I haven't seen any signs of sellers moving with rates getting down into the 6% range last year. So maybe if we get in the fives, that changes. Maybe this year's different.
All right,
we
so
just
there's a
haven't
bit of
seen that
resistance
actually play out
here.
in the numbers just yet.
I know they said something about
Well,
legalization
I
or
think it's
something
gonna
like
depend on
that.
I also wonder if falling rents
I'm
aren't
not
going to
too
help
sure
a little
why
bit, because if we see
MSOS would be
perhaps
popping like
downsizing
it
baby
did right
boomers or
now.
people who don't need to buy another home might consider selling at the top of the market and
I
getting into
just
a rental because rents are coming
asked.
down a bit. Maybe that helps the market a tiny bit. But
I just
I'm
asked to
looking
see
for
if
the
we'll see if I
silver
can get.
lining, Kelly.
Aren't we all?
See.
Diana and Andy, thank you very much. We appreciate
Yeah,
it
see
today.
here, there's no
Diana
news.
Olick and Andy
The last
Walden.
news was
Coming up, Bob
12:28.
Iger scoring a point against Cheyenne in the ongoing battle for Disney board seats. But with the deadline for those nominations closing
DEA
tomorrow, could Nelson
reviewing
Peltz fire
marijuana's
one last
classification.
salvo? We'll talk about that next.
Changes nothing. Changes nothing. It's pretty much legal anyway. Let me log into my brokerage. All right, let's do this. Let's go through them. Like we've been trying to do this since 12:30 or so, and I keep going into other things. So, Microsoft. I could pull up an hourly chart. All right. I mean, that's a nice rejection at 373, but that's also a nice hold on that support level.
Call now for your free retirement survival kit. 1-800-213-5317. See if your dream retirement is on track. If your retirement portfolio is $500,000 or more, give us a call. Call 1-800-213-5317. Thank you for calling. Please hold. When you talk to your custodian, does it feel like you're not being heard? Thank you for calling. Please hold.
WULF, Terra Wolf, announcing December production and operation updates, planning for additional growth. Construction of building 4 already underway. Expects to repay about $14 million of debt.
I haven't looked at Google in a while either, but Microsoft's just been stagnant, staying in one area. Oh, what about Nexier, whatever the hell it was called, whatever it was. NEXI, I think it was. Yeah, NEXI.
Self-mine 334 Bitcoin in
So there's your breakout of that flag and the pullback to it, and it's trying to hold it now. See how it broke out, pulled back to it, trying to hold it, blast off. But I don't know if it will. That's a major pullback there on low volume. That's a low volume breakout with nearly as much on the pullback. I know you probably don't understand what I'm saying because I just went through it really quickly, but this increase, see this increase in volume on this pullback? I don't like that. Just a lot of volume that I think is just, you know, $10 was the target anyway. You know, the final target was like $13.86 to $14. That's crazy. It did break out. It was a perfect setup. It was a really nice setup. Nice pennant bull flag there. Like, if you want a picture of a bull flag, that's your bull flag. Kinda. I can show you different variations of it, but that's a bull flag right there. There's your pull, there's your flag, the breakout, pullback, retest, go higher, but this one's probably going to fail. It's probably going to break down on you. So, be cautious. What's Amazon been up to? This is a nice setup. This Amazon isn't selling off. Amazon is still up at its highs. Right? That's right. That's right. I was thinking Google and Amazon are like, they've been like hanging out with each other. Let me log in real quick.
Of cooperation with the companies it invests in. Now, ValueAct owns about 5 million shares in Disney. That's according to sources close to the situation. This helps Disney defend against Trian, which votes nearly 33 million shares, including about 25 million shares owned by former Marvel Entertainment chief Ike Perlmutter. Trian saying Disney's agreement with ValueAct does not change its approach to this proxy battle. Now, analyst Gordon Haskett weighing in today saying that this gives Disney an important backer and it will, quote, put this endorsement to work while it campaigns for votes ahead of its annual meeting. All of this comes after Trian last month nominated Peltz and former Disney CFO Jay Rizzullo to Disney's board. Back in November, Disney named 2 high-profile new board members, former Morgan Stanley CEO James Gorman, who has had experience with proxy fights as well as succession planning, as well as Sir Jeremy Darroch. He's former head of Sky Media. Now, there's another activist firm which says it supports Iger, Blackwell.
I'll be right back. I got to find something to snack on before these Fed minutes are released. We have 15 minutes until they're released, guys. 15 minutes. Ladies and gents, have your game plan.
Certainly very strategic here for Disney to align with ValueAct.
And again, I was thinking about it just as Jeff Ubben has wound down his other new firm, thinking about some of the success that they've had there in the past. Anyway, I wanted to ask you about kind of to the point about which way Disney should go. We got this data point about how Universal overtook Disney as the highest grossing studio in the box office last year, Julia. And it really does speak to the decline Disney's experienced at the box office. It was, you know, they didn't have one of the top 3 movies for the first time in a long time, first time since 2014. None of Disney's movies crossed the $1 billion benchmark. You know, so there are real challenges here.
Yeah, I mean, look, there have been a bunch of movies that are scheduled for this year, some big Marvel movies. So there's some expectation that the box office will be strong this year, in part because of those Disney franchise films. There are concerns about superhero fatigue, franchise fatigue in general, but I also think the question with Disney is whether audiences became accustomed to watch first-run Disney movies at home because of some of the programming decisions during the pandemic, programming decisions made by Bob Chapek, Bob Iger's predecessor. So I think the question now is really getting the content that's going to get people out to get audiences out to theaters in the same way that Barbie and Oppenheimer did this summer. Of course, Oppenheimer being one of those big Universal films that helped with its box office totals. But this is something that Bob Iger has said is a key focus of his. And he said that this is, an area he's really going to be focused to make sure that the films are the kinds of blockbusters that they've traditionally had.
Yeah.
And there was also some acknowledgement of the fact that maybe some of Disney's films this year, like Marvel's, suffered because of the fact that they were being produced in part during the pandemic.
I mean, there are some out there like Barton Crockett, as you know, who still say, maybe a breakup is the way to go. So the fact that that's even, not considered implausible, I think tells us a lot about the struggles of that division, or whether it makes sense to keep it with parks and all the rest of it. In any case, they've got a lot of work cut out for them, that's for sure. We'll see what the next 24 hours bring.
I would just say, Kelly, that the movie studio has always been seen as an engine for the rest of the whole company. So the characters and franchises developed for the film slate, for the movies, are then exploited across the different platforms, not just Disney Plus, but also the theme parks. Think how intricately intertwined those businesses are. You go to the theme parks to see the characters that you saw on the big screen.
No, it's true, and it's all the more reason why they kind of have to sort out their box office woes as soon as they sort out the board woes, I guess. Julia, thank you very much. We appreciate it today. Julia Boorstin following that story. Coming up, shares of this small cap tech name are up 55% over the past year, and several firms see more room to run, naming it a top pick for 2024. But with the NASDAQ under pressure, are growthier names in jeopardy? We'll discuss that with an investor and a top analyst next. Welcome back. Shares of Apple are lower again today, now down more than 4% since Barclays downgraded the stock to underweight yesterday. And that's helping Microsoft edge closer to overtaking Apple's market cap for the first time in decades. You can see about 100 billion shy right now. And that bearish call also dragging down Apple's ecosystem. AMD among the hardest hit, down more than 8% over the past 2 days. Taiwan Semi down 4%, and that translated into the worst first day of the year for the NASDAQ since 2016. But our next guest both see opportunity in technology, if you know where to look. Joining me now is Nancy Tengler, CEO of Laffer Tengler Investments, and Mark Mahaney, Evercore ISI's head of internet research. Welcome to you both. I don't want to totally, well, Mark, let me start on kind of the big picture theme here, and maybe Nancy, I'll ask you both. If this is just a change in leadership, is Microsoft the new Apple? And Nancy, I'll put this to you first. You know, for a couple years, Apple has literally kind of been the stock market. As it goes, so goes everyone else here. Is that changing now?
Well, I mean, don't underestimate Apple. I understand that growth is slowing, but one of the things I think the market is missing is that the company has announced $100 billion in share buybacks, and the Magnificent Seven alone has announced 190. Apple's 100 of that. So that puts a floor under the stock price. But that said, we took it out of our 12 best ideas portfolio about 2 years ago. We still own a small piece of it, and we do own Microsoft in our 12 best ideas portfolio. And the last thing I'll say about that is I think Mark and I both were investing during the 90s. We think this market is analogous to that time. At the end of the decade, the four horsemen were trading at ridiculous valuations at peak earnings. For Microsoft, it was 51 times peak earnings, and it's trading at about 30 not peak earnings today. So I think there's plenty of opportunity. It's a much more robust company with a lot of levers to pull and a lot of monetization still to come in AI.
Mark, do you want to speak to that? Because this is now the second time, actually, this analogy to the 90s and 2000s has come up. But when David Bahnsen used it earlier this hour, he used it in a negative way, meaning, you know, that he saw that as, yes, that was the peak.
Well, I think Nancy has a better memory than I do, and I'll also defer to her in terms of Microsoft and Apple. I would hope that one stock doesn't move the market. And the Magnificent Seven, yes, I would hope the market moves are broader than that. To me, the take on the Magnificent Seven was last year, after a pretty severe 18-month rout in tech and growth stocks, you had the seven highest quality tech stocks lead us out of that. Well, of course you'd want that. You want the most speculative stocks to lead us out? No, you want the highest quality, and that's what we had. Now I think we'll get into, and as we have for the last 2 or 3 months, kind of a diffusion in the stocks that outperform. So I think that creates some new opportunities. Doesn't mean some of those Magnificent Seven can't continue to work. Amazon and Meta, for example, are two of my favorite longs still for 2024.
Amazon and Meta are. I think we showed Pinterest going into the break. What are your thoughts there?
Well, Pinterest is our top mid-cap long, so this is part of the diffusion trade. I think Pinterest, under new management, and it's been about 18 months under new management, it takes time to turn these ships. But under new management, I think it's improved tools for advertisers, things they call mobile deep links and direct links. But the return on ad spend for marketers who are working with Pinterest has been rising. The CMO of Walmart talked about a 15x increase in return on ad spend with Pinterest. And then they've got this partnership with Amazon that's really going live now. And I think that's big enough to cause that growth rate to jump up a couple of points. So I think it's a clear revenue growth acceleration story into this year with much greater cost discipline than they've had in the past. So you're going to have real nice accelerating earnings growth this year, too. It's one of the reasons why it's our top long in mid cap.
All right. And Nancy, just to go back to kind of what's going on with Apple and so forth, I mean, maybe some would make the case that Apple's growth is peaking. But I don't think they make that case for Microsoft. It would be hard to, right, given everything going on with the AI cycle.
Yeah, I mean, and thank you, Mark, for saying I have a better memory instead of that I'm just a lot older than you. Yeah, I think we know the total addressable market is an estimate, but it seems like some of the numbers from Fortune Business Insight is that we're going to see 45% compounded annual growth rate in generative AI spending through 2030. If you look at cloud computing, that's not over yet either. The total addressable market.
Talk that CAGR, girl. CAGR, CAGR. Compound annual growth rate. Learn
going
it.
into cloud computing. So if you step back and you say labor shortage, which we still have, we have a productivity improvement that we've seen, much like we did in the 90s. I think you can draw an analogy, as I did, and say, look, we can coexist. Tech stocks can go up with higher interest rates, as they did in the 90s, as long as we're seeing improvements in productivity. So we're going to use this weakness, as we did in the fall of 2020, to add to some of the names. We don't own all of the Magnificent Seven, like Mark suggested, but we do like names like Broadcom, which we call a poor man's NVIDIA, or Amazon is one of our top picks as well. Andy Jassy got Tim cooked when he took over. And Tim Cook, by the way, since he took over, Apple's up 1,600%. It's a free cash flow story, Amazon that is. And by 2026, they'll be generating $100 billion in free cash flow. That's after spending $50 billion on CapEx.
Of course the camera's out. It's all good though. Talk that Kager. For y'all that don't know what that is. Again, it's compound annual growth rate. Learn it. If you guys want to sound smart, learn it. Go to the food or the water jug, and you guys are talking stocks. Somebody brings up a name or something. You know what the Kager is on that? Kager? What the hell is a Kager? Oh, you don't know about the compound annual growth rate? The measurement in which a company grows? You know? Alright, so I think I've done this about a thousand times. Fixing the whatchamacallit, the camera. So if it goes out again, it goes out again. Alright, so we have a few minutes here. All I have is Doritos. I gotta wait till this comes out. It comes out in 1 minute. This is all I have, so I'm not going to munch on it, and I'm not going to eat these. I just need a couple, so I'm going to turn the mic off for a second. I know the wrapper probably is atrocious in the whatchamacallit, so I don't think anything will really change, but if it does, what do? You got to watch, you got to pull up the CME Fed rate tool. Look at the SPY. Look at the SPY holding up. Let's see if it tries to bounce. Again, we won't know if we're about to find out here in a minute what's going on. I got to pull it up for you guys. Give me 1 minute. Likely at or near its peak. There's your there.
Inflation target. Officials judged that GDP growth would cool, labor market rebalancing would continue in 2024.
I'll cut right to the chase of these December minutes and tell you that to the extent there was a discussion about cutting rates this year, it was not a very
viewed risk to inflation and moving toward greater balance. Most participants expected restrictive policy stance to continue.
Welcome, everybody, to Power Lunch. Alongside Kelly Evans, I'm Tyler Mathisen. Glad you could join us. Stocks continuing to sell off to start the new year.
Down 174 points on the Dow right now. Take a look
I just
at the
wanted
NASDAQ.
you guys to hear that.
Its 0.8% decline continues the stretch
We already know. These are things we already know.
First day for the NASDAQ composite.
I'm going to pull it up right now.
2016. We did see more upward pressure on rates earlier. We've backed
Here's
off,
Steve
but let's
Leisman
get
for
to
you.
Steve Leisman for the Fed Minute, shall we?
Yes, indeed.
Kelly, thanks. And I'll cut right to the chase on these December minutes and tell you that to the extent there was a discussion about cutting rates this year, it was not a very robust, in-depth, or resolute or confident discussion. Fed officials saying that they did see the current policy rate at or near the peak in this rate hike cycle. The projections showed that most agreed a lower target range would be appropriate this year, as in 2024. But there was a high level of uncertainty around those rate projections. So uncertain, in fact, that it was possible the economy could require further rate increases, the minute said, or keeping the rate unchanged longer than expected. They did agree that it was appropriate to keep policy restrictive, quote, for some time. Now, a number of participants, this is a place where they did kind of hint at rate cuts, highlighted that there were downside risks from keeping the policy rate too restrictive for too long. And some said the Fed should begin thinking about when it might communicate the possibility of winding down balance sheet runoff, but that seemed to be far into the future and very, very obscure in terms of a comment. Now, more importantly, on the issue of inflation, the risk to inflation were seen moving towards greater balance, and they said it was clear progress had been made on inflation, but they underscored they needed more evidence to be confident that inflation was moving back towards the 2% target. There was some optimism about it surrounding, for example, labor supply and demand coming back into balance and housing inflation coming down. The labor market remained tight, but coming into better balance. The participants saw momentum of the economy as stronger, perhaps, than currently assessed. Now, there was a bit of an upside and downside to the inflation discussion. I'll go through it, and to give you one important point here, many remarked that the easing of financial conditions could make it more difficult for the Fed to reach its goal, noting that that yields had declined pretty substantially in the lead up to that December meeting. On the downside part, there were lagged effects of policies and potential weakening of household balance sheet. Just one more thing. The staff forecast, which is pretty important in terms of the Fed making their decisions, also saw continued upside risk to inflation. Kelly, Tyler?
All right, Steve, thank you very much. Stay with us as we're going to return to you in just a moment. But meantime, our next guest
it's not on the
says
Fed
rate
site,
cuts
guys.
seem like a matter of when, not if.
Hold on.
But it might take a downturn to get to that when point. So he bought the sectors that he thinks are best for safety along with him today. Joining us is Ken Stern, Lido Advisors president. Ken, welcome. Good to have you with us. Do you still feel, based on what you just heard Steve say, that rate cuts are a matter of when, not whether?
100%. I absolutely think that there has to be some rate cuts. What I worry about is what's going to happen, because the market, as we all know, is a leading indicator. And what
Yeah, that's not
has
even
been
coming up on the
hoping and
website,
driving
guys. So
this market,
unless
is
you had
the
a
fact
squawk
that
box,
employment has been so strong, and we know that. And employment being strong has saved, I think, a lot of pain. The market rallied so high last year while rates were going higher. If we see rates starting to come down too fast, I think the market's going to spook.
And they would be coming down too fast because the market would be anticipating that the economy is in some distress, sputtering.
That's exactly right. If we start seeing, this is the time to stress test. This is the time to take a step back and say, we've got a lot going on in the world today. We have a lot going on.
Sorry, it's not
with
up
the
here,
consumer.
guys.
We're starting to see consumer debt, coming up a little bit. We're starting to see savings rates go down. I think this is the time that we do a little bit of a stress test.
That's
and
weird.
A little bit of election
That's real
protection
weird.
here.
How do you do it? What do you do?
So instead of betting how quickly rates are going to go down, let's just say that we think the long term is positive. And with that in mind, let's do a little hedge. Let's do a little downside protection. Let's do something that's going to protect if the overall market goes down. Days like today where we're seeing volatility, why are we afraid of that? It's going to happen. Why don't we embrace that? Have the cash available. And I do think, and I think this is similar to your last guest, Kelly, I think this is a balance. Could the Magnificent Seven still rise? Yeah. But why not go into more interest rate sensitive healthcare names, financial names? Why can't we start broadening back the portfolio out?
You can. Some people are just afraid to because they don't want to underperform again or they want to stick with tech. Let me just circle back in a moment. If I can just go back to Steve Leisman on the minute. Steve, the market initially had a knee-jerk reaction to the downside. We're stabilizing somewhat here. How much should we read into this idea that maybe you can put it better than me, they weren't exactly gung-ho in the discussion, at least, about cuts. It was more in the projections?
I want to go a little off topic here.
Sure.
This all reminds me a little bit of a Bruce Springsteen line where it says, take a right at the light, go straight into the night, and then, boy, you're on your own. To the extent the market is forecasting 6 rate cuts next year, or this year, sorry, it's on its own. These minutes do not back that up, would be my personal opinion here. I think the minutes are backing up this idea that there's likely to be rate cuts this year. Those are in the projections, but that the extent to which the market has that certainty, and I did see it, by the way, in the probabilities in the last couple of minutes, back off just a touch. It's still a 70% probability of a rate cut coming in March, but that is something the market has to own on its own and cannot really point to the Fed to come to that conclusion. And it's okay. It's not wrong if Ken, for example, wants to advise his clients, hey, the Fed is going to cut rates in March and do so 6 times because my inflation forecast is X. I don't think you can go back to the text to support that conclusion.
Yeah, so the words do seem a little bit more like they're holding back. They are indicating that the sort of the peak of this cycle, Steve, has been reached, but they're not really committing, at least verbally,
No, and like I've said, Tyler, it's okay to have that conclusion, and that could be the right conclusion.
I'm throwing my
There's no-
hands up, guys,
the Fed
because
doesn't have any
the Fed
lock
minutes
on
are
getting
not on the
forecasts
page.
right, and God knows it may actually
All right,
have a
so
lock
I
on
don't
getting
know.
them wrong sometimes.
I don't know
But
if they
that said,
posted them,
if you do this,
and then
you
something
do this on your own
happened.
recognizance, essentially.
So I'm
You go out there and
refreshing,
you say,
refreshing.
okay,
It's
I
supposed
have
to be
this
here,
inflation
right? If we
forecast
go
that comes
to
down to
news
the
and
point,
events,
and this is the key point here,
minutes of the
that
Federal
it
Open Market
provides the
FOMC
Fed the
December 12th,
confidence
13th.
that it says
and
in
we
this
click, the
document
page is not
it
there.
needs in order to
So-
cut rates, and that's going to happen between now and the March 20th meeting.
So, Ken, you mentioned a couple of sectors.
And
that
I've
you
paused
think
my voice
are
because I'm trying to eat a couple
well-positioned
Doritos, eat something
for
before I go get
defense.
something
Let's
to
go
eat.
back through those a little more slowly.
I got to go run to
and
the
obviously
grocery
there
store.
are
With
big
being a
sectors.
holiday, New
Finance
Year's
is a
Eve and
big
stuff, I
sector.
didn't really
That's
go
right.
get
There are
anything
insurance
just yet,
companies
so I'll
in
have to
it.
do
There
that
are,
this afternoon.
Big banks. There are medium-sized banks. Healthcare is vast.
That's right.
So where within those sectors?
And also what Steve said is super important. I don't think that the market necessarily needs to decide, I think rates are going down in March. I don't. And I think that
All right,
things
well, look,
are
there's
very
your
dynamic
retest.
right now. If,
Let's
for
see if
example,
we do
start
not
to
get
see
above
a slight tick up of
470 again.
unemployment, you're going to see all of that go out the
Let's go to
window. And you're going to
futures.
see the Fed's going to want to save this into that soft landing that everybody's hoping for. And we have an election year. And we have political risk. And we have oil prices that are in flux right now with what's happening geopolitically. So I think the idea is to plan for the volatility, to have some defense in place, to have some hedges in place. And then you're right. I think that big pharma didn't do so well last year. It looks pretty, from an absolute standpoint, it looks promising now. So this is an entry point for that. Same with regional banks. Same with brokerage firms. These types of sectors and industries, regardless of what happens with the Feds, because it's a probability game at this point. Do I think that rates are going higher? No, I really don't.
This area
Do I
is
think
holding
rates
up
stay the
really
same?
well.
Maybe. Do I think rates are
475
lower
on the
12 months from
futures?
now? Yes. Based on those two
And
probabilities,
then 470
I can
on the SPY.
overweight those sectors.
That's
with
your
a
area
little
you
bit
wanna
more
watch if it
confidence,
breaks.
The house confidence, if you will.
If you had to guess, would you guess that the rate cuts will be backloaded this year rather than beginning sooner? In other words, later rather than sooner?
I would, but again, if you're waiting till it already happens, it already happened in the market.
Yes.
The market's a leading
True.
indicator.
Yes, the market's been saying this.
This is right. And
for,
so
for 3 months now.
Yeah, that's right. And we all know a broken clock is right twice every 24 hours. So I do think backing this in right now makes a lot of sense and just erring on the side of caution. So when we do have these big down vol days, these are days to start accumulating.
Ken Stern, thank you very much. Ken Stern of Lido Advisors. We appreciate your time today. Thank you.
With the yield on the 10-year note briefly back above 4% earlier. Let's get a pulse check after the minutes with Rick Santelli out in Chicago. Rick, what do you make of it?
Well, I'll tell you, here's what I think of it. When the chairman walked out and began Q&A, he was pretty much seeding the market for aggressively pricing in eases. When he said basically, you know, guys, today's discussion was basically about easing. Now they're walking it back a bit. So what did they accomplish? In an election year, they accomplished the previous December, which was just
I'm listening to my
weeks
guy.
ago, hitting the highest level in the Dow Jones ever on multiple occasions. They raised up the equity markets. They built in eases. We hit $34 trillion in debt today. So obviously funding costs at higher versus lower levels is quite significant between the Fed and the Treasury.
Looks like
I
the
think they
10
did a
year is
marvelous
trying to go
job of
green,
kind of
guys.
guidance
It's
as they
trying.
walk
It's red,
it
but it's
back
trying to
now.
go
But
green.
in
It's
the
not
end,
far from being
the
green.
markets are going to get what they want if the Fed can't get the markets to change their outlook. And a whole set of other variables coming into the equation. Weakness everywhere we look. Let's look at ISM, new orders. 16th month, consecutive month under 50. All right, JOLTS, nearly a 3-year low on job creation going back to March of 21. Now let's look at an intraday of 10s. It hits 4%, then it anvils off the Empire State Building and drops and tests yesterday's low yields at 391.5. Makes a new one, and then it stabilizes on the minutes. We haven't closed above 4% in nearly 4 weeks, the 12th of December. And when all our guests talk about market rates moving down, they better really be more specific on the Fed versus the market, because the yield curve is the biggest trade for 2024. Every source I have, thinks long-dated treasuries have a chance to hit 5% again, but they certainly don't feel that aggressive about 2-year note yields. Kelly, back to you.
So,
Rick, could you
did it
comment
just go
on
green?
the dollar, please? We saw a
That was
big
weird.
increase yesterday,
Hold on, look.
one of the strongest gains in some time, and then today it looks like it's continuing after the minutes.
Yeah, no, it hit 101 on a closing basis and it held. And I do believe that the yield curve, if it comes to fruition, that long-dated yields are going to be bucking the trend of short-dated yields. It's going to make trading the dollar index a lot more dicey because we're going to get strength on the steepening of the yield curve. We're going to get
So you can
weakness
see
on
there.
the notion
See how
that
it was
the
just
market
going
may be
green?
more
You guys
correct
probably
on
didn't
Fed
see it, or
eases
the-
than many think.
was the
So
dollar.
if I had to make a comment, I'd say that the dollar index isn't going to get trashed, but I would be pretty confident we're going to be trading a bit under 100.
Interesting. Rick, thank you. As always, we appreciate it. Rick Santelli.
All right,
Coming
this is
up,
going to be the last
high-end
time that I
holding
mess
on.
with this camera.
Luxury real estate was a bright spot in the broader housing market last year, but can that continue? We'll speak to Douglas Elliman's Noble Black about that next. Plus, the auto market starting off with some good news. December sales the strongest since 2019. Are consumers more flush, or is this just a post-COVID pickup? We'll be right back.
And yes, I took my watch off because I didn't want to get ranch and I didn't want to get that shit all over it. All right, so there's a rejection at 470. So it makes sense to just lean on the shorts. Continue to lean short until we get a reason to go long. All right, we're holding up here. It's more of like a consolidation type of day.
$85.55.
Welcome back, everybody. While sales in the broader real estate market plunged in 2023, the high-end market seemed to hold up better than expected. Let's hear more from Robert Frank. Hi, Robert.
Tyler, good to see you. Manhattan
I think
home prices
this
rising
consolidation
for the first
to
time
go
in over
higher
a year,
or lower to
driven
break this
largely
level.
by the high end.
Guys, I
Median
think it's
sale
going to come
prices
down
rose
to
5% in the
tomorrow
fourth
and
quarter
Fridays.
to
God damn it, why did it have to
$1.16
pause me
million.
there?
That's according to Douglas Elliman and Miller Samuel.
Like, just pause
The
me where
average price
where
for
my
a
eyes
Manhattan
are open
apartment
or
also
something.
increased to just over $2
And like I
million.
look half
Total
normal
number
as
of
normal
sales
as I can
fell
look.
due to a lack of inventory. Sales volume dropping 6% in the quarter and 29% for the year. But sales above $5 million, that's kind of mid-market in Manhattan. That increased in the quarter. Most of those are wealthy buyers. They pay in a lot of cash, so they're not as reliant on mortgage rates. 2/3 of apartments in Manhattan were sold for all cash. That marked an all-time record. Meanwhile, nationwide, the ultra-high end held up fairly well in 2023. There were 34
All right, so
homes sold for more than $50
tomorrow,
million.
ADP employment numbers.
5 homes
All right, tomorrow's ADP employment numbers, I think will or could help us continue with a continuation or non-continuation. Initial jobless claims, S&P, really it's just the continuous or initial jobless claims.
I just missed out on getting that.
Yeah. You bid $1 less, right?
About a couple dollars.
Next time it comes around. Robert, stay with us. Let's get an agency.
Oh, my little girl, she started yelling at me. Hi, come here. CPI, Euro CPI, I guess we'll have that next week. Italy, so there's some inflation data for the rest of these companies. Hi, Boo Bill, I know you're hungry. Let me see here, what do we have? Excuse me, I'm sorry guys, we have non-farm payrolls, so I think we gotta wait for ISM, we gotta wait for some of this data to come out. I think today's just gonna continue, we're just gonna continue with this, with where we're at now. So let me go feed her. The S&Ps are just hanging out, and that's what I expect we do. But what's the move, right? Do we continue to get a continuation? Or are we going to go, revert back to the mean and kind of go back to the upside? Or are we going to go test that double top from Fed Day? All right? That's my target to the downside. The upside target is going to be our previous highs. All right? Our previous highs, which would be at like 475. So 475 is my upside target. The downside target is 465. So there's a 10-point range there.
High-end properties comes on the market in Manhattan. Do they sell above the asking price or below it?
I'm coming.
Defining high-end, right? So for the true high-end of Manhattan, and let's talk about maybe above 15 to 20 million. Those are
I'm getting hungry. I know she's getting hungry, so let me go feed her real quick. I'll turn this up, and I'll be right back. And I'll look to
maybe something down.
We'll look to see if we can, if it makes sense to possibly try to put a long on to see if we can kind of get back some of these, get back these like two days of downside. So give me 5 minutes. I'll be right back, guys. Thank you.
People are really, exasperated. They've been looking for a long time. They haven't found anything. So once they see something good, they pounce.
That's like the first-time buyer cohort in Manhattan, basically, Robert.
Yeah, and what really helped the high end during 2023 was the supply of new development. And a lot of that, it seems, is kind of running out because of financing, the trouble getting financing from banks right now. There's not a lot of new development that's been started in the last year. So what will be the fuel to help 2024 if that's gone, at least for New York?
Well, the pipeline's definitely running dry. So you're right, we're not going to have that. We're running through what remains of that. There's a couple that are downtown. There's one in particular that's coming, but that's a few years away, right? So what we've had to rely on for the last few years is gone. I think as rates continue to lower, you're going to have sellers that start putting their properties on the market, right? They've been locked in great mortgage rates for however long. There's no inventory for them to go towards. So once that starts relaxing, we're going to see the market unstick. But there's not that big driving force that we've seen. I think we're going to go where we are here, kind of sideways and up a little bit, but it's going to be a better story than 23, but much continued where we were.
Is there a hot building right now or a hot address in Manhattan or a couple of them?
Depends on what you want to buy. Downtown, if somebody's looking for new development, there's one in particular that's done very well. And again, that's partly a story of a good product, and also there's not much competition for that. That's over One High Line, so that's West Side. We've done a nice few deals there. Very good developer. If you're looking uptown, there's one building that continues to just do astronomically well, and that's 220 Central Park South.
Yeah.
So very little that's available.
Even I've heard of that one.
Everyone has,
That's
right?
the Ken Griffin building, yeah.
And you heard of 15 Central Park West before that. This is the newer version of that. Both are great buildings, but if you're talking about popular and kind of it building and popular culture, that's getting crazy prices.
One quick final question. How is it being affected? A couple of years ago, the whole story was people leaving. We were just joking about Miami with this lovely scene behind us. What impact is that having, if any? Because it seems like some of these prices are still at records or activity levels are at records.
I think it's a lot of impact in the press, but the thing that's often overlooked is a lot of those people are changing their tax residency, but they're not selling their apartment, right? So those people that are moving down, in some instances, they're still coming back up. They don't actually want to be there year round. But even if they do, they still want to have a footprint in New York. They still want to come back for the cultural reasons. They want to come back for kids, for shopping, what have you. They're not giving up on an apartment in the city. They may just change their tax residency.
Very interesting. Very interesting. Thank you very much, gentlemen. Robert,
Thank you.
Appreciate it very much. Up next, a domino effect with billions of dollars on the line. Apple's big downgrade yesterday from Barclays trickling down now to the suppliers. We will break down the moves down the chain on Apple. Be right back.
NBC.
Welcome back to Power Lunch, everybody. Shares of Apple lower once again today, down 4% in the first two trading days of the year. And when Apple falls, its suppliers take a hit too. Steve Kovac joins us now with a look at the collateral damage.
Yeah,
Steve?
big time. And look, this is really from the playbook back in 2022 when Apple sneezes and a slew of its suppliers catches that cold. So that Barclays downgrade yesterday on Apple spurred that 4% drop in shares. And the same concerns we've been talking about forever, iPhone demand, Mac and iPad demand, and lackluster services growth all on the horizon. Down another % or so today, kind of waffling around there, but also following many of Apple's important suppliers. Let me just rattle off a few examples here. Han High Precision, better known as Foxconn here in the US, they assemble Apple devices, fell a bit yesterday and today. TSMC, that's of course the chip maker for Apple devices, fell 3% yesterday and another % today. Broadcom, they make the Wi-Fi and Bluetooth chips for Apple devices, fell nearly 3% yesterday, down another 2% or so today. Qualcomm, maybe you've heard of it, they make the modems for Apple's devices, fell almost 3% and down another 2% today. You get the idea of what I'm going here. Now, these companies supply a lot more than just Apple. But the size of Apple means there's just a lot of revenue exposure for all these names. Look, we're going to get earnings from Apple here in a few weeks, and it's going to be telling about Apple and all those suppliers and more than I just named, especially commentary on the March quarter, which in that downgrade yesterday from Barclays, the analysts predict will be weaker than the street is expecting. December quarter, by the way, Apple says to expect flat,
I know
flat
this
sales.
is a hard question and maybe a naive one, but as you look at the stock price declines of those suppliers, are the declines commensurate with the percentage of revenue that is traceable to Apple? Or is the stock market overdoing it?
In some cases, yes. In some cases, no. Historically, there have been some suppliers where, they get like 80% of their revenue from Apple, so you see a bigger fall there.
Right.
But my point here is it's also a signal that other consumer electronics demand is falling because there's a lot of those names.
Because Qualcomm doesn't only do business at all.
Nor
with
does
Apple.
Broadcom. Qualcomm is also in every single Android, or just about every single Android phone, for example. So, it's also a signal that if people aren't buying iPhones, they're probably not buying Samsungs and those premium phones as well. So, at the same time, PC market, a lot of commentary going into this year that it's going to recover, that we finally hit rock bottom. So maybe that can benefit some of those names I just rattled off. But when Apple falls, all these names fall along with them.
And Apple has a high, by some reckonings, a high PE right now.
Yeah.
But wasn't Apple within the past week, 10 days, within dollars of an all-time high?
Yeah, just December up to and November, they were at that $3 trillion market cap mark again, and also, like you said, yes, all-time highs. They had all-time highs last summer, into the fall again, and here we are.
And here we are lamenting and once again wringing our hands over.
It just takes one downgrade to have these ripple effects throughout all these suppliers.
I also wonder if we are experiencing a leadership shift. Apple has been the most important stock to the market, arguably size, influence, whatever, for a long time. Is Microsoft starting to edge in there?
That is. I am watching this every day, tick by tick, because Microsoft has the AI narrative, right? They are, at least on the software side, NVIDIA on the hardware side, the leader as far as what they're selling and so forth. Apple has nothing to show on AI. Everyone wants to see something. What does Apple have cooking when it comes to this user-facing AI? And they don't have anything yet.
To sort of back out for a second and say the iPhone arguably was the most important product to the world for the past 10 years, right? That's why we're talking about the supplier ecosystem. But is the most important product now generative AI and the way that it affects those chip stocks and that ecosystem? I just wonder if that's going to kind of supplant.
It could be, and like so many of those chip stocks claim they're AI chips and so forth, but they're not yet. I mean, ARM is trying to make a case for itself to be an AI company, but right now what they do is not as capable as what NVIDIA or AMD can do. Look, the iPhone's not going away or going to be replaced or disrupted anytime soon. I know there was that downgrade that commentary from D.A. Davidson this morning kind of saying, where's the innovation and so forth. That story's been asked about Apple so often. It's usually wrong.
What you just said, though, is so interesting to me because
All
a
right.
decade ago, ARM was exciting because it was an Apple system.
Exactly.
Let's do this.
And now they're trying to say, no.
Let's do this. Let's fucking do this. All right, so we're getting a bit of a rally here. Like I said, watch to see if it holds. But, uh-oh. Releasing names. Oh, we got to go to Twitter, guys. I wonder if the market's rallying because of the names that were released. So Epstein's.
White House said no update on national security review of Nippon purchase of U.S. Steel. That's letter X.
Why?
Attorney General issued a statement this afternoon saying there is no evidence the shooting was motivated by bias. The U.S. joined 11 other countries today to condemn attacks in the Red Sea.
Hot damn.
Futures settle at 72.70 up $2.32.
It's my kind of girl.
They believe support Israel, but the joint statement issued today warns the Houthis the attacks are illegal.
All right, so
Feel the consequences. Kelly, back over to you.
Pretty significant show of force
Epstein
there.
list.
Still to come, peaks and valleys in the tech hub. Over the last few years, we've seen startups and big money flowing out of Silicon Valley to other parts of the country. But is the AI boom bringing it back home? We'll talk about that next. Before we go to break, let's also get a quick power check. Today is Marathon Petroleum. Mizuho out with its sector outlook, saying they're positive on the names. Their shares are up about 5%. On the
that downside, Enphase, along with the rest of the solar space, Enphase shedding more than 5%. That's your power check. Power lunch will be right back.
Let's see here. Let's see here. Let's see here. Let's see here.
Bot & Bow is the #1 premium company in comfort and style. Their jeans have dynamic stretch technology to provide absolute flexibility. They're probably the most.
I just want to see.
Head on over to montandbow.com for the perfect balance of fit, style, and comfort.
I guess this is it.
This is a keepsake frame. This is actually a photo from my wedding.
Okay, I guess.
Cheers, getting some volume here. Foxtrot Sandy Romeo, FSR.
Mobile app that makes it easy to have your photos printed, framed, and shipped to your doorstep.
Okay, I thought it was just.
You can preview it in over 100 frames, and in a
I feel the same way.
see your photo in a beautiful handmade frame. So if you've got a special photo on your phone, install the free Keepsake app. We would love a chance to frame it for you.
I only brought this up because CNBC just reported it. I don't know. I'm not worried about it. I'm not worried about this shit. I only look to see if it was released or whatever. I really don't give a shit who's on it. Like, they all. I mean, they all have money. They're all gonna hang out with each other, right? Doesn't mean somebody did something they shouldn't have done. We don't know. We'll never know. That shit is in the past. It needs to be left in the past. Democrats, Republicans, because now this is a situation that isn't political. That is just political. That's it. All right. We gotta stop, man. We gotta stop fighting with each other. Like, this does nothing for no one. Fighting about COVID, fighting about presidents. Like, yes, Joe Biden's a dumbass. Does Donald Trump act like a dumbass? Yes. Okay. Like, if you want one person, just, you know, it's funny how everybody disrespects everyone. You know. It's funny. It's not funny, but, you know. Someone may have a reason to do something that you may not know about. Maybe they know something you don't know, right? I mean, either way, it's not like the president just, they have all this power or whatever like you think they have. Really, it's about who can put together the best team. That's it. Who can put together the best team and have the best, you know, what's good, like, as far as, you know, regulation and all that stuff, right? You're seeing what Biden's doing. They're going right back to regulating the shit out of everything. Like, and it's not that, some of that shit is not okay. It's not okay. They want to get on all these credit card companies and stuff like that. Well, now you're taking the competition out of comp, I guess. I don't know. Either way, we're off of that subject. So what I want to see here is so what, I don't have that much. So yesterday I was kind of liking the idea that we could see a rally. All right, so here we go. Here we go. We're trying to hold 47. No, never mind. 470.43 is breaking. VWAP is way down here. I can turn this TV down. Because
Bioscience is at $9.81 now, just the highs up about 7% falling there. That was earlier from Wells Fargo, that's running out of Alpha.
Well-positioned AI as opposed to Apple, but I don't think Seattle's a place you're going to see it. Right now, all this main activity is happening down here.
Why do you not think Seattle is?
It's a very different question. Startups and whether Silicon Valley remains the center. I agree. We've seen other places like Nashville seems to be a nice spot to consider starting, but none of these places can challenge the center. And the idea that $1 trillion company is going to emerge out of Atlanta, I just don't see it.
What about,
So I think
Seattle? What about Seattle?
Not anymore. Now, Seattle's got hope because Microsoft, your last segment is spot on. Microsoft may be the new leader because it's so well positioned in AI as opposed to Apple. But I don't think Seattle's a place you're going to see it. Right now, all this main activity is happening down here.
Why do you not think Seattle is going to be a place that is going to see that kind of development? They've got Amazon, biggest cloud company on earth. They've got Microsoft, maybe number 2 in cloud, and they're both going to play very heavily in AI.
We have had companies up in Seattle, and they have a hard time in Seattle. They've actually, one of them moved out to Nashville. It's just too hard up there. But the center of AI work, OpenAI, which Microsoft is so close to, is down in the San Francisco area. And that's why. And this is how it always happens. Whenever a new factor production comes in, like PCs or the internet, everything centers where the core of it is. Because, well, let me ask you, have you read Elon Musk, the book about Elon Musk that just came out? Fantastic book by Walter Isaacson. Hardcore. He is an advocate. You've got to come together. You got to not be remote, but in a building, and you got to work hardcore. Yes, he's spot on about that. And that's happening in the AI world down here, not in the diffused world out there.
Let me ask it to you this way, Duncan, because one other effect we saw accelerate during the pandemic for sure was just a boom in startups, period. Now, maybe you could say, we don't know if all those are going to pan out yet, but the mix of software and remote working is, and maybe you could throw AI into the mix, I mean, maybe the software, you know, is that inherently causing us to have more creative destruction, more startups? So yes, Atlanta gets more. Yes, Mobile, Alabama gets more. Yes, the Acela corridor gets more, you name it. That there's kind of just more of this activity in general, and maybe the business models are easier to scale.
This Alibaba, man, if you could get, man, if this thing could just get a lift, it doesn't really have that much volume to the buy side. That's, you know, the type of volume that would make it pretty clear that you have some institutional picking down at these levels. I don't see it. I mean, you have a little volume down here on these lows. We traded this already. First off, last week, it was last week or 2 weeks ago, we traded this. That's why I had these levels. Because we took this double bottom reversal. So, yeah. We're cool. What are you doing? What are you doing with your trading? Are you catching reversals? If not, get with it. Join us. Let's go. All right? If you need help, we're here. Shut the hell up. So, yeah. Baba, I don't know. It doesn't have a nice pattern. There's nothing that screams, you know, trade me. Right this minute, I should say. What I keep thinking about is Baidu. It's still on its lows too. You know, what I was thinking about is Coinbase, right? An instance where Coinbase is $40, $30, and I'm like, you know, digging around on it, and I'm not buying it. I'm not buying it for the long term. Like, should I buy Baidu? Should I start adding to Baba? That's what I'm questioning right now. All right, because these are on their lows, and if they can get moving, you should have no problem, you know, getting a decent return. No problem at all. Should have no problem. Look at these. Like, look at these swings. Like, look at that. Isn't that the longest pennant you ever seen? This is a weekly chart. Look at that. Look at that trend. Holy cow. Look at that. That's insane. On a weekly chart. It's actually pretty wild.
Fascinating. Really, really interesting stuff, Duncan. Thank you so much.
and then it breaks out. And I guarantee you, if I do this, watch this, guys. I'll teach you all this jazz, right? I could have went up higher a little bit higher, but I didn't. Oh, what is that? It took you right up to where? To the highs. Funny how that works, right? When you start measuring your moves. All right. Anyway, try and find something to trade here, guys. Alright guys, I might be out of here. We traded JP Morgan today. Nice green trade. I was pretty happy with it. You know, it wasn't really about the trade. It was about practicing your trades. Because in order to get great, you need to practice. And quarterbacks want to be MVP players. They got to get the timing right with their receivers. In order to get our timing right with our trading, we have to get our timing right with our trading. I know I just repeated myself, but I got my cat in my hand. A little bit. Hold on, baby. Hold on. Hold on, mama. Let me turn the camera on. You can say goodbye to the people. Hold on, baby. All right, right here. Let Dad do this. Properties, deactivate, activate, okay. All right. You want to say goodbye?
It shows the rise of the
say
hybrid.
goodbye.
ICE vehicles, they continue to lose their momentum,
You say
down
goodbye.
about now to 84%.
Okay, we see
Look at
you
hybrids,
tonight on the watch
outselling
list.
EVs in 23,
All right.
up to 9% of the market.
We'll see
And then
you
see
tonight
EVs
on
at
the watch
7%.
list.
For General
If you guys have
Motors,
any
they
questions,
end
throw them in the
year
comments. If you guys
with
could, hit the like button, subscribe if you haven't already done so.
market share. That
Get
is
ready
up
to attack
3/10
it
of a
tomorrow with
percentage
us.
point.
All right,
So
we'll be
it's a
here
nice move
bright
higher
and
in
early.
terms of overall US market
See you
share.
then,
They end
guys.
number
Have a
one.
great night.
Then you have Honda.